Yo, what is up for everyone on the YouTube replay? I have a pretty interesting video or stream for you. I'm first going to give you a portfolio update because the market is absolutely tanking right now. Then I'm going to do a deep dive into the newest stock I just bought. And I fell in love with this stock. I literally bought it today and I just made a whole video about it. I can't wait to show you. So anyway, yeah, look at my main dividend only portfolio. It is down 2.7% just today or $800. So yeah, RIP this portfolio. Every stock in here is down on the day. Here's my total percent change. So this is kind of like a healthy pullback. I mean, it's not the end of the world. I mean, we're still up 21% year to date. We're just like about 4% off all-time highs. But yeah, we're still total return green on every stock. But yeah, not great to see this much red. It actually creates a good buying opportunity. I'll show you the new stock I just bought. I actually bought it for the first time ever in my Roth IRA, and I might actually buy another share on stream. I have some cash ready to buy the dip more, but I bought a stock called MOG. This is Moog, and I'm about to do a whole deep dive into this stock. I can't wait to share with you that. But it looks like Innodata is green because this actually benefits from the war conflict, which is kind of interesting with their big Palantir and federal government Golden Dome contract. But anyway, let me show you my Webull account. We are down. This is not good. I love being fully transparent. We are down 1.5% on the day. And all time, we're only up 7%. And here's what's green. So Sprouts Farmers Market, it's showing its defense, and same with this regulated utility and the commodity call main stock. So, yeah, let me show you what's down the most on the day. Davis down 5, CHRW, Reddit's down 4. Where's Robinhood? Yeah, okay, Robinhood's only down 3.3. That's not too shabby. But yeah, total, we're down $250, 1.5%. But then we have our Moomoo account, which if you look in the top right, there's our today's profit and loss. We're down 2.15% on the day. But I want to show you that oil stocks are actually doing great. You know, not great for the consumer and inflation numbers. I'm sure not great for the next time you go refill your tank. But it's good if you own some oil stock. It's showing its defense today. Like ExxonMobil's doing great. This is like the only stock that's green. Yeah, Murphy USA. This is an oil and gas station play. But yeah, Comfort Systems is down the most, $522 on the day there. So let me deep dive into this new stock I just bought. I can't wait to share with you. So this is Moog, and yo, what's up, everyone? Yo, it's Ariel from the Discord. Yo, good to see you all. What's up, Filmed? What's up, Johnny? Yeah, we'll look at y'all stocks in a minute here. I want to deep dive into this stock. I just bought them for the first time ever today, and we're flat on the position. Like we literally just bought them. We're down 0.01%. I promise, if this stock doesn't impress you, feel free to hit the dislike button. And but check this out. This is Moog. They were down 6% yesterday, and they're down another 2% today. So I thought it was a pretty attractive time to buy the dip on this one. They do multiple different things. They're big in aerospace and defense. They have crazy missile contracts right now. So this is like a hedge. If war keeps escalating higher and the tensions, that'll just benefit this company even more. This is the highest growth rate. Look at this year over year. It's up 30%. After grew 7, after grew 8. So this is the highest growth rate on the entire screen. And check out the expectations. This is what the analysts were expecting them to report. That's the orange line, 987 million. Notice every quarter they beat on expectations like crazy, like on EBIT2 net income this quarter too. It was all great. And they also, y'all aren't going to believe this, every single major like spacecraft in history, like the Voyager, like every single one in history uses actually their satellite components. They have so many patents. It's crazy. I was just doing a whole deep dive into them. They also sell one business growing right now is their data center cooling pumps. For the full year 2025, it was 25 million of sales. They just projected it's going to be 50 million. Yeah, military aircraft and commercial aircraft. This is like the satellite components. It's up 22% after grew 12. Every like Lockheed Martin plane uses their patents and their valves and stuff. It's nuts. So yeah, they're beating on expectations every quarter. Oh yeah, and I forgot to mention, look at this market cap. The whole company's worth 9.95 billion. They have a $3.3 billion backlog. So literally 30% of the market cap is just their backlog. Like that's invaluable. That long-term stability into the future. You know what you're going to be making in a year from now over a 12-month backlog. So if we look at the revenue grew 21. So revenue's up 21, but the net income is up by 37. So in English, that means they're expanding their margins. It's the highest margin now. It's over 7% net margin. Their new missile contract just had crazy. Oh, Yeah, they just got a new $100 million missile contract. They also pay a dividend too. They have around a 0.5 or 0.4% dividend yield. Check out, so they made 80 million this quarter. Look at how little this dividend cost. The dividend only cost them every quarter $9 million. That's why I think there's going to be a lot of significant dividend growth in the future. And since they have so much leftover money, they're doing share buybacks. They've bought back like over 1% of all the shares just in the past year. So yeah, like the Voyager spacecraft that was sent into space 40 years ago that's still running was using their valves and stuff. I want to pull up I just made a whole deep dive into them. If you want to see more, check out my most recent video on them. But yeah, that's the most recent stock I bought, and literally today, so we're only up 0.21% because we just bought them. But yeah, it's my newest stock in my Roth IRA. I thought it's a nice hedge for this war environment, could be a nice little defense. Hey, what's up? I saw someone saying Uber. Yo, this is one of my favorite stocks right now. There is a lot of increased competition from like Waymo and Robotaxi, but Uber actually just acquired this app that I use. It's called Spot Hero. I wonder if it's going to show it down here. Oh, it was like a week ago, so it's already out of the news. But they bought this app called Spot Hero, and I think that was absolutely genius of Uber. And Uber, I cannot believe how cheap they are. The valuation is like surprisingly cheap. So if we look you don't look at their current PE on the left because they had like this one-time adjustment making their net income look way higher. But if you look at the forward PE, it's a 22. That's what I can't believe. Like I believe Uber could easily stretch up to like a 25, a 26 forward PE pretty easily and send this up to close to an all-time high. And check out this number. This is their monthly active consumers. So not just monthly active users, but monthly active consumers at Uber went from 171 million to now 202 million. That's impressive. And if we go to their mobility ride sharing business, that grew 18% year over year. After grew 25, after grew 33. So they're just on a streak of growth. And not just that one, but also their delivery revenue. The delivery side's up 30% year over year. After grew 21, after grew 6. So that's incredible. This is Uber Eats right here. And they're also doing like business to business delivery. Like it's just great. 30% year over year growth. I can't believe it. So if we exclude, like they had a one-time adjustment last quarter, says they made $6 billion. They didn't actually. That's why we're not looking at their current EPS and current PE. But if we just exclude those one-time adjustments, profits are at a record. Literally this quarter was a most profitable record quarter ever for them, 1.77 billion before tax. And then if we look at the free cash flow as well, it was a record free cash flow. No wonder they're doing so many acquisitions, 3 billion of free cash flow just this quarter. They don't pay dividends. They don't really have much debt to pay. So they can just invest in the future. So yeah, I really like Uber. Yo, what's up, Ariel? If you have a stock you may look at, let me know. I need help deciding what to do with my AGM stock. Hey, what's up, Keva? Good to see you. So AGM, which one is he talking about? I think he's talking about Federal Agriculture Mortgage. You're talking about this stock, right? Let's check it out. So this might be like a commodity stock, I'm guessing. Or no, wait, agricultural mortgage. So 3.7% dividend yield. Let's see. So they're a credit services company. Maybe we can get, I guess we can't look at their website. Okay, what? Guess we can't. Okay. So they do a variety of loans to borrowers in rural America. So the farm and ranch segment includes USDA farm and ranch loans. So maybe that's why they're called that. They do a lot of loans to farmers and ranchers or something like that. This forward PE is really cheap, and notice the forward PE on the right is lower than their current PE. So the EPS is expected to grow. Okay, so here's kind of how it breaks it down. Okay, I'm glad they did this. So farm and ranch, that's up 8% year over year. That's actually a good rebounding growth because it used to be like low single digits. Let's check out the other ones. Funding revenue, it looks like that's down 10% year over year. Or anyway, where's US is all their revenue? Looks like they slightly missed. So look at this quarter. Analysts expected 49 million in net income. They only did 40. They beat on revenue, but just a slight miss on net income. That's still an incredible margin. Is that a 40% net margin? Yeah, look at these margins. I mean, even though it's down a little bit, this is still incredible. A 40 to 50% net margin, 3.7% dividend yield. Still a good forward PE, assuming, again, that forward PE is using these orange numbers. So as long as they meet these numbers, they're really at that like 8 forward PE. Yeah, it's not too shabby actually. We just want to see them not miss on these numbers again. And let's go see. So they made 47 million in net income this quarter. Let's go see how much the dividend costs for the fun of it. The dividend costs 22 million. So yeah, around a 40%, 50% payout ratio. They can easily afford the dividend. Yeah, like a 35, 40% payout ratio. So I don't know if I'd sell them unless you just wanted to raise cash and buy it in something else. The growthy area is also loan to utility infrastructure, which is why I invested. Oh, yo, that I bet that is seeing a lot of demand right now. And one thing is like probably farmers are doing great too. It's good to see that. I guess John Deere is kind of falling a little bit, but this is kind of a good way to see. But yeah, John Deere is doing pretty good. Wonder how actually let's see how Tractor Supply Co. is doing. Tractor Supply Co. is doing pretty decent. Oh, I guess it's flat on the year. Hey, Phil, yeah, my bad. Let's get to AMPX. Let's do that one. Oh, I see Robinhood too. Can you compare Uber to Lyft? Ooh, I actually like Uber a lot more than Lyft, sadly. Oh, wow. Hey, congrats if you own this stock right here. Ampress Tech, I actually have them on my watch list, so I don't remember them, but there was something I liked about this stock in the past. Yeah, that's an all-time high. So if you've ever bought this stock, you're definitely up on your position. So sale of battery products. Oh, I remember this company. Yeah. So they just basically are, I wouldn't have this one as a meaningful size position, but I can see why there's a lot of hype around this name right now, just because they're really having good growth. I mean, it's still a really small, well, let's see the market cap. $2.27 billion market cap. That's actually pretty reasonable for the growth that they're having. You're like triple digit growth from the past 5 quarters in a row. Again, it's easy to grow when your revenue's only 7 million. Hold on 1 minute. Sorry. Okay, we're back. They're still, look at how they're narrowing the losses. This is the other great thing. They only lost like $3 million. Like that, only losing $3 million, that's such great news. Like they're basically losing no money. And the analysts are projecting the revenue to just continue to go higher. It's still going to experience that 100% growth. The revenue is going to go from 15 mil to 30 million. And historically, they usually beat slightly on revenue. So, interesting name here. They're up 12% on the day. Maybe they just reported earnings. I don't know. Maybe they're just, maybe got some contract. Someone said they're a drone battery company. Interesting. Again, not one I trust with the crazy amount of money. I certainly probably wouldn't buy it at all-time highs, but I'd probably see them continue to climb higher if they just keep beating on earnings like that. Liquidity is sure dying up for private credit. That's what BlackRock just said today. This was so weird when I saw the news. I wonder if they'll. I think it was over here. Let me pull up the BlackRock news over here. Dang, they're down 7%. They're not allowing people to withdraw from their private credit fund. Where's the exact news? BlackRock curbs withdrawals from private credit fund, and yeah, they're limiting withdrawals. So they have this private credit fund, think of like a Blue Owl, a BDC or something, and it's tanking a Blue Owl too. Look at Blue Owl, these private lending companies. It's a tough time to own private credit. So I don't know if I BlackRock would probably be the best buy. I love their ETF business. Actually, should we look at BlackRock low key? There's one metric I love on BlackRock. So obviously they have that private credit business, but they have an ETF business. And if you've heard, they have an IBIT Bitcoin ETF and a new Ethereum ETF, and that goes under their alternatives it's under their alternatives revenue. Check out that spike. This one they created the ETF, it literally doubled. If we go to this on a quarterly basis, insane, up 35 after grew 44. Last quarter was up 119.71. This is because of their crypto ETFs, but they have the other business. Yeah, private equity. Yeah, so that or equity, it's up 18% year over year. I like them as a dividend growth stock. They actually have a good yield, a very safe over 2% yield. Looks like, okay, so they had a one-time adjustment or something this quarter. Maybe they realized a loss or something, but the revenue grew 23 and the profits grew 9, but it's still great profits. They're making great money. It says the net income fell 25. I'm assuming it didn't actually because of a little one-time adjustment, but because actual operating profit grew 9. Yeah, BlackRock could be an interesting buy, the dip opportunity. The forward PE is a 17. No way. Let's see that again. Wait. Yeah, look on the right. A 17, a teen multiple. That's actually kind of cheap, for a good company like BlackRock. Hey, what's up, Zero? Liquidity. Yeah, what's up, Wishing? Oh yeah, C said Hood. Let me get to Hood and then we'll do CWCO. So I am a Robinhood shareholder. I actually own Robinhood in my Webull account. Where are they? Yeah, there's I only have 5 shares. I regret every share I've ever sold to Robinhood. And I'm also a Robinhood user. RIP my portfolio today. Hit the like button. We're down 2.6% on the day. Or just in this portfolio, every stock is red in here. So, but Robinhood stock specifically, I'm a big fan of. I really love what they're doing with the prediction market business. Let me show you how that one grew specifically. They actually break it down for us, which is pretty cool. So, event contracts traded. And this is month by month data. This is pretty cool. They created this literally at 9/2025. They did 1.7 billion event contracts traded. Just this month or January 2026, they did 3.4 billion. It just continues to go higher. And that's their highest margin business, because whenever you go do an option contract or a stock contract or just buy a stock, they keep like 0.1% as like a transaction profit. But whenever you do a prediction market contract, they keep 2%. It's literally 20x more valuable for their bottom line. And that's what's leading to this explosive bottom line growth on Robinhood. Actually, I should pull up the net income. It's six. This is the after. Again, they had a one-time adjustment. They didn't actually make 900 mil that quarter, but they made, this is real this quarter, they made 605 million of net income. That's after they paid 40 mil or 50 million of taxes. So that's real. And the total revenue was 1.28 billion. So that means their net margin is nearly a 50%, a 47% net margin. Again, excluding this one quarter, which I should look at the operating profit because it removes that one-time adjustment quarter. They're the most profitable they've ever been, with the highest margins they've ever had. Like the Robinhood Gold subscription is very successful. The option or the prediction market contracts are doing great. So one thing that did disappoint was actually their crypto volume this quarter. It actually fell year over year. I think it fell a bit year over year. Like it missed expectations by like 20% or something, their crypto revenue expected. So that was one of the reasons they did fall on earnings. And they kind of usually kind of follow what Bitcoin does. But yeah, I am a Robinhood user, and I know a lot of people are doing. I don't really recommend or ever do the prediction market stuff. Only time I did one was on the Super Bowl. Hey, what's up, Eric? And let's do CWCO. What's this one? Consolidated Water. Yikes. So they fell yesterday and they're down 4% today. This might be like a water commodity stock. So they're at almost the same price as they were back in 2008. Let's see. So they're at a 23 forward PE. That's a good forward PE compared to its current PE, because a 33 is expensive, but a 23 is pretty decent. So they're actually expecting a lot of net income growth. Guess we don't actually get that much expectations. So so it's kind of at least the growth is back. You know, the revenue's up 5 after it fell 33. So let's zoom out here. So okay, they had a spike up in 2023. So on this 35 mil of revenue, they netted 5 million. So they do have a 16% net margin, which is pretty decent. But the net income is just so tiny. Like they're only making 5-6 million a quarter. I think this might be a regulated, this is a regulated water utility. So they're not actually allowed to raise prices, but they do, like, they can't get a much higher margin than this, but it is good because of this balance sheet. Check this out. They actually have no debt, literally no leverage on this company. That's phenomenal. Let's see. So they also have 124 million of cash, no debt, and the whole company's worth 500 million. So yeah, literally like 20% of the market cap is just their net cash on hand. Yeah. Oh, wow. So some of the revenue actually is way outside the US, like the Cayman Islands, the Bahamas, revenue earned from service agreement. So yeah, services, Anyway, some sort of water play. Hey, Isaiah, no way, dude. Thanks for that gift there. That hand heart, no way. I appreciate you, man. If you have a stock you may look at, let me know, Isaiah. I got you. We'll definitely check it out. Please slow down and break it up for us. Hey, my bad if I'm talking too fast. That's my bad. Hey, Jim said my entire portfolio is down, but I'm looking for a new stock I think you'd be interested in. STCK. Let's check it out. Thanks for the Moog. Hey, AJ. Yeah, at the very beginning of the stream, we did a super deep dive into Moog if you want to watch that. And I just did a whole YouTube video about it. Wait, so STCK, let me know which one you're talking about, Jim. Is it called Stack Capital Group, or is it this grayscale stack? I'm pretty sure you're talking about the Canadian company. So actually, I will just default to this one. So yeah, wow, they're actually doing great. They're pretty close to an all-time high. They're only worth $255 million. So all the revenue comes from Canada, makes sense. The revenue just popped off this quarter. So it used to be nothing, literally 80K a quarter, but 6 million this quarter. That's good news. And they must be like a blank check company or something, or what kind asset manager. Okay, so they're an asset manager, and it's good to see this fortress balance sheet, literally like no liabilities. And let's see, is that all cash or their actual assets and something? So yeah, they have 31 million of cash. And that's actually over 10% of the market cap is just their cash on hand, well over 10%. Oh, wait, let's actually convert the currency to US dollars. That would be better. So, okay, 138 million and so 22 million in USD in cash. Okay. Looks like the revenue. Yeah, so 4 million of revenue. So, I wonder how that's going to look in the future. I wish I could give you more thoughts on them. They're just so tiny and they're at an all time high today. So, congrats if you own them. Oh, Isaiah said, "Hey, thanks again for that big gift there." He said, "Hey, Nate, app was a great buy at 370. They're flying." Dude, I can't believe it too. I did not expect AppLovin to do so good. We literally bought this stock days ago. There's my little buy order. But 1.5 shares at $380, and it's up 29% since then. I can't believe it. This is one stock I've been kind of talking about like crazy, especially during the week it was super dipped on. I was like recommending this stock, and I'm like, I just got to pull the trigger and buy this stock because they're so phenomenal. And I think they're going to continue to climb higher. Like I'm up 30%. I'm certainly not going to trim because this is going back to, I think, $600. So just from a valuation point of view, like if we look at the forward PE versus the PE on the left, like it's so great because they're very expensive if you look at their current PE at a 50, but the forward PE is a 31. And here's why I think they're very deserving of a 31 forward PE because they have the most impressive growth I've ever seen. This is their after-tax net income. So they made 1.1 billion. You know, the before tax was 1.28 billion. So this is after they pay all their taxes every quarter. I like it's so impressive. No other company is growing their bottom line like this. They literally made 1.1 billion of after-tax net income when the total revenue was 1.6 billion. So that means their net margin is a 66%. This is like a net margin expansion play. And I bet you're wondering, like, is the net income probably going to stop growing from here? Not according to the analysts. Check this out. The net income is going to go from 800 mil to 1.25 billion. I mean, it's just up and to the right. Same with the revenue. Revenue's going to 1.8. Net income's going to 1.25. Every EBIT's going to 1.5. So I'm like so bullish on this company. There's a lot of future growth, and they're actually in talks about partnering with OpenAI. Wonder if we can find that news actually. It's probably like a couple of days old, and we're not going to be able to find it. But OpenAI is actually considering partnering with AppLovin. AppLovin touts upside in gaming ads, teases e-commerce launch. I want to find that OpenAI news, but you know what? I'm probably not going to be able to find it. So oh well. But yeah, I'm super impressed with AppLovin. That's a great growth name I'd put on your watch list. They're an advertising stock with the best margins I've ever seen. They just did a stock buyback, or they're doing massive buybacks, but I just can't believe the net income growth, and it's not stopping either. So let's do Charlie said INFQ. And sorry if I'm missing some stocks here. I'm trying to get to all of these. I see a lot I want to get to here. My main growth stock has crashed. I've heard it's the asset value, EVGO. Can you? Oh, hey, Stuart. Yeah, hey, that one. Ooh, we'll try and get to that one. And we'll do PagerDuty. Yeah, sorry. I will definitely do PagerDuty in a couple. All right. So here's INFQ in inflection. I've actually not heard of this one before. They're only worth 1.9 billion. The stock certainly hasn't done too well. Looks like this is the only earnings report we get since they've been public. So we probably won't get too much data. So product revenue and service revenue. No guidance. So yeah, this is the only quarter of data we get. So they did 9 million in revenue. Not the best looking balance sheet. A lot more liability, or double the liabilities as assets. They lost 8 mil. What did they actually sell? I guess the only way to get a better idea is go to their website. Oh, so it's like a quantum name. Customers and collaborators. That's all great, but we want to see. I guess okay. So here's what they actually sell or browse quantum core products. They'd be very careful with a lot of these quantum names, but looks like this one has some real products. So they did have 9 million in revenue this quarter. So it looks like a very nichey, very risky. So I'd keep the allocation that one low, but out of all the quantum stocks, this one does look pretty decent. But again, I just wish I could give you more thoughts. There's just only one quarter of data I have here, sadly. But cool looking website. Okay, I got to go over this one. I feel bad. So here's like if you look at financials, like this is a stock you could probably see from a mile away, like, or its financials explain why the stock is done so bad and close to an all-time low. Here's how I kind of like to look at things. This whole entire company is worth 668 million. So let's say you do that investment and you like at this valuation, you buy the whole company for 660 million. Well, you're buying an asset in a company that loses 30 million a quarter. And 30 million is 5% of the entire market cap. So they're losing like 20% of their market cap in net income a year. And that's why there's real bankruptcy risk. So I bet there's short interest. Yeah, look at that. 26% of all the shares right now are being shorted because of this probably bankruptcy thesis, I'm guessing. Is the revenue growing? So good news, the revenue is growing. It's up 36% after it grew 92. So that is good top line growth, but it's just these net income losses that are a bit scary. And I think are they doing, yeah, so they are diluting, they're either issuing debt or diluting you. Ah, I wouldn't add more to this position. It's not, I wouldn't buy that one to be honest with you. I'd be very careful to allocate more. I don't like being bearish, but those are risky fundamentals there. Let's do PagerDuty. Ooh, and NSL Power Solutions. Yeah, dude, Power Solutions had such great earnings and they fell. I'm actually shocked. I do own Power Solutions. Yes, sir. Stack holds OpenAI and SpaceX. Oh, hey, cool, Jim. Oh, cool. And then we'll do SoFi. Yeah, and Zoetis. I'm seeing some good names here. And Monster. Yeah. So here's PagerDuty. So I think this is, in the software basket of software stocks that are tanking right now, but they are experiencing that nice little rebound like Adobe, Salesforce, AppLove, and they're all for the past week or so doing pretty well off their bottom. And potentially, knock on wood, that was the software bottom. Like the risk to reward, like valuations were so cheap. Like Adobe was near like a 13 forward PE, like we just couldn't believe it. So this is, we'll talk about the good and the bad. So the bad news is probably the slowing top line growth. Like the revenue is slowing down. Like it's only up 4.7. Like it grows like mid single digits. We kind of want to see them grow back at double digits, but they are finally making profits. This is the great news. So if we zoom out, for all of eternity, they were losing, 10, 20 mil a quarter. But now it's like an inflection point where this company is literally going to be making net income potentially for the rest of time. Or let's see the projections here. Yeah, well, or I guess EBIT. Wow, they've been crushing EBIT expectations. They expected 26, they did 35. Again, don't look at net income this quarter because they had a total one-time adjustment. It says they made 161 million. They didn't actually. They only made 8 million, but this 8 million was still a phenomenal earnings. But yeah, next quarter, yeah, it's supposed to make 5 million. So yeah, we're basically buying a company as they're converting from like losing a lot of money to finally making profits every quarter. But we do want to see this kind of top line growth start to grow faster than like a mid single digits. I remember looking at their website. I actually was really impressed with what they do. Over 700 integrations, trusted by 30,000 companies, CR customers, I guess. Anyway, interesting name here. Oh, the Zoom CEO is talking about it. Let's do Power Solutions really quickly. Yeah, I am a shareholder. I'll show you how much I'm down on this stock. I think we're just slightly down. This isn't one I really recommend having as like a meaningful size position. Like I only own 5 shares. This is one you don't want to have like a lot of your portfolio in, but the risk to reward is so good. This is like, it reminds me like of Powell Industries. Like if we look at the market cap, actually, let me analyze it over here because it's better to analyze. Look at the market cap in the top right. They're small, and that's what I like. They're only worth 1.24 billion. And check this out. Out of all the companies worth 1.24 billion, I want to buy the one that makes this sort of net income. They're printing 20 to 50 mil in net income a quarter, and these are great year-over-year growth rates. The revenue grew 61. So here was their most recent earnings report. So this is Q3, and here's what they just reported. So they reported earnings 2 days ago, and they fell. They went from 86 and now down to 60 and 53. But they beat on revenue. Analysts expected 169. They beat on revenue. They beat on net income too. They expected 14. They did 16. They didn't beat by that much, but it was still a beat, and that's what I found impressive. And they beat on EBIT too. They expected 17. They did 24. They beat on EPS. So I'm not actually too sure why the stock fell so much. I didn't deep dive into them. Maybe they lowered their guidance. Let's see. Oh, wow. Also, the company acquired metal and steel manufacturer, MTL Manufacturing and Equipment. I love acquisitions. Maybe they had to lower their guidance because of an acquisition, or maybe they weren't happy with the acquisition. But, I really like this one. Oh, and I forgot to mention the valuation. The forward PE is a 12. Like, that's so cheap. It could stretch up higher, I think. So let's do SoFi. Another one I'm a shareholder of. I regret every share I've ever sold a SoFi, but the risk reward is starting to look very fair. Like if you don't own any SoFi, this isn't a stock you'd want at this valuation. You like if you wanted this as 5% of your portfolio, you don't make it 5% of your portfolio today, but you maybe go ahead and make it like 0.5 or like 1% or whatever. You kind of get the concept there. Whatever a full size position for you is, like don't full size position it yet. But this is why I think it's so attractive to start a nibble. If we go to the forward PE, it's a 28. That's the cheapest forward PE SoFi has ever had, and they are very deserving of a 28 forward PE. Let me show you why. This stock, the metric you want to look at is their financial services, because this is the metric that's been blowing away analyst expectations. It's the best growth driver. It's up 80% year over year, after grew 101, after grew 141, after grew 80, after grew 600%. This growth, no analyst expected this sort of growth on their financial services. Same with like their lending too. This is still growing very nicely as well. Look at that annual trend. Quarterly, it's up 19% year over year, nearly 500 million for the first time ever. So that's why people are really starting to take SoFi serious. They really are a good growth stock, because we can see these are great growth. They did $1 billion of revenue for the first time ever, and they're not just making revenue, but real net income. They're making over 100 million in net income a quarter. They're actually beating on their net income expectations every quarter. Check this out. They expected 152. They did 170. And notice the expectations are up and to the right. It's supposed to be 200 mil of net income in 2 quarters. I think JP Morgan even just took a stake in this company. Yeah, 3%. So that's why I certainly would not be selling out of SoFi if I was a shareholder, and I am a shareholder. I'm actually looking to potentially buy a little bit more of them. I really am impressed with their numbers. So Muck said Zoetis. This is an animal health company actually. They sell a bunch of different like solutions for like pets and livestock. So if you've ever seen a cow and like in the cow's ear, there's like that big white circle, that's a parasiticide, and it spreads this like liquid all over their body that prevents parasites. So parasiticides, that revenue's at a record right now. That's up. The growth is slowing a little bit. Yeah, actually, that's not good. It's only up 4%, but that's not the end of the world. I love how diversified the revenue streams are. So they're in parasiticides, vaccines, dermatology, which is actually, I think, growing very nicely, anti-infectants, pain and sedation, all for animals, other pharmaceuticals as well. One reason why the revenue is partially slowing down right now is because they just sold off a big portion of their business. They sold off their like generic brand pharmaceuticals that were low margin. So that's one reason why the revenue growth is slowing down, because yeah, this doesn't look good. Look at this top line growth, low single digit, sometimes doesn't beat inflation. Like last quarter, it was only up 0.5, doesn't beat inflation. But the best news is their bottom line, their net income. They easily make an after tax, like this is the before tax was 820, after tax was 603. So and that's every quarter. They really make like 700 million a quarter, and they have a great yield. You get a near 2% dividend yield. They raise their dividend very fast, like way faster than inflation every year, because they can easily afford it. Oh, and look at the valuation on the right. So the current PE is a 20. The forward PE is higher because the forward earnings are supposed to be higher than what they are now. So a 17 forward PE, that might be appropriate for a company growing, low single digits. But I specifically like this one because they also do massive buybacks. So the dividend they pay only costs 200 million a quarter. And since the dividend costs a little, because they're making like 800 mil a quarter, they're doing massive share buybacks. Whoa, just this quarter, they bought back $2 billion of stock. Look what that does to their EPS. So here's what share buybacks do for you as a shareholder if you didn't know. It's so beneficial. It literally almost forces the stock to go up. So look at this. The net income grew by 3.8, but the net income per share grew by over 6%. The EPS and the net income growth rate should always be the exact same. The only thing that changes this is the share part of the ratio. Since there's less shares, more earnings go to the less shares. So that's why the EPS grows faster than the net income, which makes the PE ratio go down, makes the dividend cost less, gives you more ownership in the company. So share buybacks just send the stock up. Okay. And if it still goes down, it's because if it would have fell less if they did. It would have fallen more if they didn't do the buyback, is the theory. So, hey, what's up, Super? Said Monster. This has been one of the best performing beverage stocks. So if we zoom out, just an incredible looking chart. They sell energy drinks. Like they have the number one market share for Monster energy drinks. They just get so much free advertising and stuff. So I can't believe how they're still growing like 19% year over year. I think that's what shocked investors. Like they're still growing 19%. Like after they grew 5, and they also are another company. They don't pay a dividend, but what this company does is share buybacks. This is a share buyback. I'll call a share buyback monster because they literally spend all their money doing share buybacks. And because look at this net income, they have no debt. Look at this, they have no debt to pay, no dividends to pay. So what are they doing with 500 freaking million of real after-tax net income a quarter? Well, share buybacks. Yeah, here's the free cash flow of the company, like 500 million a quarter as well. They're selling these Monster energy drinks at a 20% plus net margin. It's really impressive. And actually, on the Monster bottler, I'm a big. Actually, fun fact: if you didn't know, Coca-Cola is the biggest shareholder. If we go to shareholders here, this is kind of Coca-Cola's way because they lost the like war of energy drinks. So they're like, all right, truck it, we'll just buy Monster, their stock. So Coca-Cola owns 20% of all the shares, and I don't own Coca-Cola, but I actually own the Coca-Cola bottler. They are the largest bottler for Monster beverage and for Keurig Dr. Pepper and Coca-Cola. And this is another just like great staple defense stock. They are another one that just buys back their own stock. What you'll notice is I specifically buy stocks that do massive share buybacks, low dividend payout ratios. They do M&A, good mo. Hey, Anna May. Hi, I like that name. Anna, thanks so much for that gift there. Sorry if I'm missing the chat. If you have a stock you may look at, let me know and we'll check it out. What do you predict for SPY on Monday? Hey, that's a good question. I don't know. I guess it all just depends on if if the war de-escalates. That'd be great news. Fun fact, we're only we're actually like 4% off all-time highs. Like we're not doing too bad. I mean, we're only off 4% off all-time highs on the S&P 500. Certainly not my portfolio though. Yeah. Okay. Oh yeah, hey Toss. Link in the description, very first link there if you want to get this app I'm on or that Moomoo. There's a brokerage called Moomoo right here. Yeah, if you want to get this app I'm on. My favorite brokerage. If you're looking to buy stocks and you want the best, it's free, costs nothing. It's the very first link in the link tree in my bio, affiliate link if you want to get it. Help me out. My favorite brokerage. And you get like a 3.35% APY on your idle cash. Actually, all these apps are all linked in the link tree in my bio. If you wanted to get Webull, Robinhood, they're all free. They're all in the link tree in my bio. But out of all these, the most useful one with the best tools that like literally cost nothing. There is no way to pay them monthly. There is no hidden fees or anything. Like this is my favorite one, Moomoo. Very first link in the link tree in my bio. And if you like deposit $100, I think we both get like a free stock. So anyway, let me not annoy y'all with that. Let's go to Blackstone. Yeah. So this is kind of like a BlackRock asset manager kind of private equity. And a lot of these private equity stuff has been struggling. BlackRock's down like 7% on the day. BlackRock, I think, is actually a pretty attractive deal. Whoa, look at that forward multiple. So Blackstone is trading at only 10 times forward or 10 times next year's net income. I mean, that seems like oddly low. But yeah, this private equity, this is the industry that's kind of like in shambles right now. People just aren't paying it back. And I don't know. But yeah, I like the real estate business. There's always memes about like, there's Blackstone and BlackRock going to outbid the couple buying their first home just to rent it back to them. So they also credit in insurance. So I actually like that. Look at their credit. I love insurance, that business model. That's up 15%, after grew 30, after grew 6, after grew 105. So they're on a streak of growth for their credit and insurance, multi-asset investing. So let's look at their net income, what they've been doing. Whoa. So for the past couple quarters in a row, they're crushing their net income expectations. They beat like crazy the past 3 quarters in a row. And it's expected to go from 1.5 to 1.9. So yeah, and they've been beating on revenue every quarter. So this is a stock where it's kind of just this industry that's in trouble right now. BlackRock struggling, Blue Owl struggling, all the private equity ones. But out of all the ones to buy, this one might be one of the safer ones because they really do print net income. They have a good yield to a 4.21% dividend yield. Sometimes it changes every year. But it says the payout ratio is 121%. Let's go verify. I like doing that. So they make on average, we'll call it 1.5 plus billion in net income a quarter. Let's just see how much the dividend cost. The dividend cost exactly, I guess sometimes they'd maybe, oh yeah, because the dividend changes. They change it every quarter, every year. But yeah, it looks like they can't afford the dividend, but that is a bit of a high payout ratio. Anyway, but it's normal for the industry. 10 forward PE, not too shabby. So, can you do BDMD? Let's do it. And then we'll try and get to a SVV and BATL, APLD. What up, Lewis? What's up? I'm holding Amazon as well. Yo, actually, that'd be a great one to deep dive into. Amazon's a great stock. Ooh, so actually, I'd be very careful with this company. If you look in the top right, they're only worth 115 million. So that's a micro cap. And just a month ago, they were worth like literally 25 million a month ago. So something just happened to make the stock go up a bunch. A lot of volume. Uh, what microwave ablation needles? M- Microwave therapeutic apparatus. Well, okay, so they sell medical devices, is what they do. Yeah, I didn't want to go to their investor relations. I wanted to go to your website. Or did they? Welcome to Baird. Ooh, I don't like. I hate looking at needles. Okay. Um, guess they're here's okay, actually let's just get out of there. So they sell needles in or something like that. I'd be careful like for the first so are they even a US company? No, they're not. So they're a Chinese company. So they're headquartered in China. So that's how they report in HAS. I'm like, why aren't they reporting quarterly? Because they're Chinese. So again, we shouldn't even cover this stock. They lost 11 mil in net income. There was some sort of good news. I'd just be super careful. Some Chinese ADR. Yeah, 98% of the revenue comes from China. I would just be careful. Maybe it could be a fun little short-term swing trade, but I don't know about the long-term fundamentals there. Let's get to Savers Value Village. I've never heard of this stock. It sounds interesting. Is it like a Ollie's Bargain Market type stock? I know they're public in Dollar Tree. Or let's go to their website. Oh yeah, specialty retail. So maybe like a discount store. Let's check it out. Here's their website right here. Like a thrifting store. Okay, let's see what their net margin is because it's probably a low margin like industry. So yeah, it's a bit so the net income's a bit choppy. Like if we zoom out, it used to be a lot more consistent back in like 2022. It was more like consistently making net income every quarter. But now it's kind of like they make net income, then they lose money, then they make money. So that might be why the stock is struggling. That might be why they're way lower than their IPO price. Because the revenue looks fine, but it's just like I guess it'd be better to look at the operating profit. Um, let's zoom out. Yeah, so even the profits are lower than they were in 2022. So we're just trying to see the profits go back up. Um, Ares Management and T Rowe are big holders. I don't know. Nothing's really blowing me away here. They're in Canada retail too. I'd probably maybe rather own, it's kind of not just a them problem. Sprouts Farmers Market's really struggling too. I'm down like 40. Yeah, look at that. We're down 38% on Sprouts Farmers Market. Hey, look at that. They are green on the day. That kind of shows its defense. But this is like a healthy oriented grocery store that has abnormally high margins for a grocery store. I guess they're just being out innovated by Whole Foods because they don't really have an online presence. But I'm really impressed with Sprouts Farmers Market and I'm certainly not selling out of them. Okay. Um, all right, let's do Amazon. I'm expecting a small decline due to tech and slow buying thoughts. Yeah, Amazon, I just loaded the boat on this stock. I mean, even now they're at a good valuation. I bought 7 shares down here, or it was like 1,400 bucks, around like 204 average. My average cost is at 197 because we've just, we were buying shares way higher. We were buying it at 230 and stuff. But anyway, let me show you why Amazon's just a great never sell stock. It's a one you can just buy and you never have to worry about. They're at, even right now, their valuation on the right is a 27 forward PE. Like for Amazon, the behemoth, only a 27 forward PE. Oh, and they're in the entire world, out of any company that exists, they do the most revenue out of any company. They just passed Walmart. They do 740 billion of revenue a year. Look at this, just this quarter, they did 213 billion of revenue. If we zoom out, like this is why they're a never sell. Their revenue just hits a record every quarter, and not just the revenue, but the profits, the actual net income. Look at this. This quarter was the highest profit ever. They have a huge like AWS tailwind. Let's see. Is there any news over here? Amazon commits 50 billion investment in OpenAI. So hey, that's a good AWS becomes exclusive third-party cloud provider with the 100 billion expanded partnership. Amazon invested 8 billion in Anthropic and it's valued at 14 billion. And they're expected to do like Oh yeah, analysts project, and here it is. Anthropic could generate 6 to 10 billion in AWS revenue just in 2026, just from Anthropic. And yeah, Amazon shifts to in-house models with proprietary TPUs to cut costs by 50%. And now they're actually selling these TPUs to other customers. Amazon's Project Kunibird, which is their satellite, partners with Vodafone to provide satellite connectivity for remote 4G and 5G sites in Europe and Africa. That's insane. Like they're going to be the all-in-one subscription, or your Amazon Prime subscription one day. It's going to be like, it'll be like an Uber Eats and a music service and a phone 4G, 5G service. Like it's just crazy. Amazon expands zero. Okay. Anyway, yeah, their AWS is growing like crazy. This is their most valuable business. That brings them most of their bottom line, their highest margin business. AWS, the number one cloud market share, does over 130 billion of annual revenue for them, and it runs at like a 20% plus net margin. Because whenever they, Amazon Prime, whenever they ship you a package overnight, they don't collect too high, single digit net margin on that. But their AWS is their highest margin business, and they're investing so much into the future right now. This is one thing kind of being questioned on Amazon. They're spending 30 to 50 billion a quarter in new assets, but that's just what Amazon always does. They don't pay a dividend. They don't do share buybacks. I actually like that. They just you can't out innovate Amazon. You can't outspend them. They're literally like a Walmart, an Oracle, a UPS, like a SpaceX all in one. You know what I mean? Like a grocery store play, a subscription play, advertising play, e-commerce play, book play, satellite play, AI play. I mean, it's a grocery store play with Sprouts or with Whole Foods. It's just a never so. What happens is, hey, this is a brokerage. If you want to get, or this app I'm on, it's in the link tree in my bio, very first link there. My favorite app to buy stocks on. So someone said, Take-Two Interactive. Oh, can you do Ford? Actually, if you want to get this app I'm on, very first link in the link tree in my bio, it's an affiliate link too. When I signed up, I actually got a free share of Ford and sold it. So if you deposit $100, well, you get like multiple free stocks if you want to use my affiliate link to get this app. Very first link in the link tree in my bio. But speaking of Ford, I've been disappointed, or I wouldn't really want to own this one long term. It's kind of like a dividend play. Like Ford is lower than they were in the year 2000. So you bought the stock in the year 2000. It's lower by 50%. But if you look at their dividend right here, you get a 6% dividend yield. And let's go see how safe it is. So let's go look at their, so the growth is kind of slowing down with tariffs and stuff. So look at their revenue, the sales, the lifeblood of the company. It's negative 5% year over year. But here's their net income. Okay, that's not great. It says negative 11 billion. I'm assuming it's a one-time adjustment. And it's not. It's even on the operating profits. So let's just remove that one quarter though. Historically, they're always usually making a profit. They're usually making close to like 500 mil, 800 mil if you average it out. But something happened this quarter. Yeah, it's just a low margin like industry. Like I sadly, I think I'd rather own Tesla than Ford, and I just don't know. Not a big fan. Actually, the better buy, the much better buy is ticker symbol RACE is Ferrari. So Ford sells their cars at like a 5% net margin, but Ferrari, they're selling these at a 20% plus net margin. And they have like the sponsorship advertising revenue, there's like 100% margin. Where can I access the portal? Yeah, hey, share. If you want to get this app I'm on, it's the very first link in the link tree in my bio. Appreciate you. Yo, no way. Yo, the legend, Jackson Hoover, dude, with like 50 roses and stuff. Dude, no way. If you got a stock you can look at, Jackson, let me know, man. I really appreciate that. Oh, he said MNDY. This is Monday. Yeah, Monday.com. This is one of the software stocks that have unfortunately been falling with the whole software dip. Oh, yeah, Tobias, APLD's next. I got you. Oh, what up? And we'll look at what up, Michael, Anthony, and Mark. We'll do JEPQ and BCAT or some of these other ones. So Monday.com, I think they're just now making their first ever sort of profits, because let's go actually check it out. Or well, what I've liked about this company is their top line revenue growth. If we zoom out, like this is what you want to see for a growth company. Like literally every quarter, the revenue just hits a new record. And that's really what you want to see for a quality software name. But their profits are struggling a little bit. I guess this quarter they only made like 2 million in profits. So I guess if that had to have been a one-time adjustment, because yeah, let's exclude the one-time adjustment. Let's look at the EBIT. So earnings before interest and taxes. So basically removing all those weird one-time adjustments. On top of that, they actually beat analysts expected 37. They did 41. I think they're just falling. And look at these projections. The revenue is going to go from 299 to 354. So there's still a lot of growth in the future. Like analysts aren't seeing the growth stopping anytime soon. So the US is 50% of the revenue. They actually have a lot of international exposure as well, which is pretty cool. Let's go look at their website right here just to get a better idea. Um, Trusted by 240,000 customers from startups and enterprises. So yeah, so they have like their like hub or whatever, task, CRM and sales. So it's kind of like maybe a competitor to like a Salesforce. I don't know. Pretty cool. Anyway, if you're looking for a software name, um, this one might be an interesting one. Monday.com. Thanks again for all those gifts, though. I really do appreciate that, my friend. So they are expensive on a forward PE. So that's the thing. Like even that's they're expensive on a forward PE because they're like just now getting net income positive. So that's the one thing. All right, let's see. Let's do APLD. That's actually a stock owned by Nvidia. You know what's cool is with that, but you could see like what super investors are doing. Like what is Nancy Pelosi doing? Her 19% of her portfolio is in Google. You know what you'll notice with super investors is a lot of them just own these great Mag 7 names. Warren Buffett, 19% of his portfolio is in Apple, and for the first time ever, he just bought Google. It's 1.7% of his portfolio. Nancy Pelosi has Google, Apple, Nvidia, Microsoft, Amazon, Salesforce, but Nvidia is so big, the stock, they actually own some individual names. Actually, I don't want to get political, but even anyway, uh, oops, yeah, the Soros portfolio, largest holding is Google. The president, he owns a lot of Apple, Amazon, Nvidia, Google, Microsoft. Like they own these companies for a reason. Microsoft is this guy's biggest holding. I love a lot of these Mag 7 names. A lot of the Mag 7 are steals. But back to Nvidia. Nvidia is so big, they own some individual stocks. They own a lot of Intel, CoreWeave, Synopsys. Oh, it's actually not in their top 10, or maybe they sold out of it. Wait, yeah. View the full portfolio. Yeah, because I'm almost certain they own APLD. So this is what they increased. Did they sell out of anything? Whoa! They completely bagged on APLD. No way. They sold out. They didn't just decrease it. They completely just sold out of APLD this quarter. I did not know that. So NVIDIA no longer owns APLD. So basically what happened was NVIDIA has a huge partnership with APLD. NVIDIA took a stake into this company, gave them a bunch of money just so that they can go buy a bunch of NVIDIA chips. The sad part is I don't love this one. They're going to do well through the rest of the decade. They're like a high beta NVIDIA, but I don't love the long-term horizon because there's nothing proprietary. CoreWeave, Nebius, they all do the same thing. What is this company you're asking? Literally all they do, the only thing that they do is they own a bunch of NVIDIA chips in data centers. And what are they doing? They're renting out the capacity of those data centers to HPC, high compute data center hosting. These cloud companies don't have enough GPUs, so they're renting out the capacity from APLD. And let's see, receives 10% stake in Base Electron. That's kind of cool. APLD guarantees 2.4 billion power plant project. Receives 10% stake in Base Electron. Oh, that's kind of cool. That's actually really cool. But anyway, they just beat expectations like crazy. This is the thing. Analysts this quarter expected 81 mil. They did 126 million. So that's why they gapped up on earnings day so aggressively. But it's kind of like just the long-term horizon. Like they're kind of the bag holders buying the NVIDIA, a ton of NVIDIA chips at a really high margin, and people are like Amazon switching to TPUs. I just don't love that as a long-term hold, but I think it will still do great through like the rest of the decade. And I'm so behind here. TJA said JEPQ. Yo, out of all the covered call ETFs that exist, I do think JEPQ is probably like one of the best ones, like a top 3 best covered call ETF if I had to pick one. You know, what do? They sell calls on the NASDAQ 100, on Nvidia, Apple, Google, Microsoft. You know, these are stocks, you know, you really want to hold for the long run. But since they're selling calls on them, the premiums are so high, they pay you a 10% dividend and they pay you monthly. So this is just a covered call ETF. So you could sell the calls yourself, but yeah, they just sell calls on the QQQ basically, and you don't really get any stock price appreciation. Like since 2024, the QQQ is up like 40% or something, but this one's flat, but you get the dividend. So it's basically you're buying that ETF to maximize your dividend income, and it hopefully won't go down in stock price appreciation on average a year. What do you think of PAGS that has 33 million customers on earnings in the Dividend and PEs under an 8. Let's check it out. Oh, key earnings results on one page. So I guess they just reported earnings. That's interesting. Okay. Dang, the stock has not done too well from their IPO in 2018, but they've certainly done well from 2024. They went from $6 and I guess now they're 9. But yeah, you're right. Look at that dog cheap valuation on the right. The forward PE is a 6. So they trade at 6 times next year's net income. That net income is projected to grow. So they have been missing slightly on earnings the past couple quarters, but very slightly. Like they expected 999. They did 985. It's not the end of the world. They did miss on net income a little bit. They expected 111. They did 91. Which actually isn't great. So we kind of just want to I see why they're at a low valuation, but that seems so low. Like they shouldn't be that cheap of a valuation. Like I get it, like the growth is slowing down. Maybe, wait, hold on. So they're around a 10% of margin. They're making around $100 million of net income a quarter. Oh, and they pay a 1.5% dividend. They just started paying that. That's pretty cool. Yeah, honestly, I wouldn't sell this one. 6.2 forward PE. Again, that's if they can hit these net income numbers, if they grow to 136 million net income. So that'll be a 36% increase to their net income year over year in EPS. Interesting name here. 33 million customers, you said. Maybe they're a software. Oh, yeah, so they're just following with the software stocks. Reach the full potential of Latin America with our one-stop payment solutions. Oh, so it's kind of like maybe an e-commerce, or where does the revenue come from then? Let's check it out. Market. Oh, so that I'm actually glad we looked at that. So full disclosure, 98% of all the revenue just comes from Brazil. So it's like a just Brazil kind of play. That's why their PE ratio is so low. Kind of like an NU. It's because of where they're headquartered. Hey, Mark, give me the ticker symbol for Syena Corp. I don't know what that one is. If you get a chance, can you look at SBET? What is SBET? So this is SharpLink. Is this Moomoo? Yeah, this is user. BATL oil. Oh, hey, Louis, please remind me to type that in the chat right now. We'll do that one next. I'm so sorry I missed that one. Oh, we'll do Micron. Yeah, Micron's I think they're going to go higher. So here's SharpLink. It's a pretty small, $1.4 billion company. So they are an Ethereum staking segment. They made $10 million this quarter just staking their Ethereum. So it might be just one of those Ethereum proxy companies, kind of like a BMNR. I think this is just like a BMNR. So you really just value this one based off the NAV of their Ethereum. So yeah, the great balance sheet, literally 5 million of liabilities, no liabilities, and 3 billion of cash. Or actually not cash, it's all on Ethereum. But I know crypto's kind of been struggling recently, so it might just be an Ethereum proxy. If this really is just an Ethereum holding company, I'd always recommend holding just Ethereum over that one, and the Bitcoin holding companies. You're like, yeah, here's BMNR, the other Ethereum company. It looks identical, so yeah, I'm guessing that's what that is. Nothing. I don't love that one. So Micron. You won't believe how cheap the forward PE is. Here's why I think Micron is gonna go higher, but I'm not crazy about adding. If I wanted this one, I would not buy much of it. Like I'd keep the allocation so low to this one. But here's why: if I was a shareholder, like if I owned this one from a year ago and I'm up like 200%, like I wouldn't trim or sell this one because I think they're gonna climb much higher. And here's why: this is benefiting from the whole memory shortage. Oh man, hold up. TikTok's saying I'm AFK. Okay. Sorry, we're back. Let's go look at the news over here. Look at this. Multiple analysts raised Micron's price target on memory supply shortage through 2027 through 2028. Like their backlog is absolutely insane. And Nvidia CEO confirms Nvidia is Micron's largest customer. Kind of cool. Samsung Mobile Division sources 50% of their Galaxy memory from Micron amid eternal pricing issues. So anyway, here's the bull case here. The forward PE is an 8.9. Here's what I'm guessing. This forward PE of an 8.9 could easily stretch up to like a 12 forward PE. Like a 12 forward PE. Yeah, hey, Matt, if you want to get this app I'm on, it's actually a brokerage called Moomoo. It's in the very first link. It's the very first link in the link tree in my bio if you want to get it. But yeah, look at these net income projections. It's literally, it beat like crazy. They expected 4.3. They did 5.3. But in 2 quarters, it's supposed to go to 9 billion and then 11 billion. If you annualize that, that's 45 billion of net income a year. and the whole company's worth 430 billion. So that's why the forward PE is a 9, because they're really only trading at 9 times next year's net income. I think it could stretch up to like a 12, 13, 14 before it maxes out and send this easily to a new all-time high. That's kind of my thesis here. And I don't know. It kind of is also, it'll move with the sentiment around the memory shortage. I guess if it just randomly fixes itself one day, that wouldn't be good for them. But yeah, we are seeing a huge like backlog, huge supply shortage. Nvidia's the largest customer, Samsung, just from AI. And Nvidia's raising their prices on their GPUs because of it. Hey, Jackson, no. Oh, wait, let me do BATL, then we'll do RZLV. So here's Battalion Oil. So yeah, oil stocks have been doing phenomenal. ExxonMobil's at an all-time high today. So this company's worth 380 million. So they're a pretty small company. I guess, what is this news here? The stock fall. Okay, they just are. Yeah, so oil prices are insane. So oil and gas, U.S. is all the revenue. So the revenue's down 4% year over year, and they're not making much profits. But they're just following the positive momentum, I'm guessing, around. It's like a high beta oil stock. Because if you go to like an ExxonMobil, like look at them. Like if we like that's phenomenal just for a boring oil stock. It's up from 120 to 151. So that's my guess. I wish I could give you more thoughts on them. That probably wasn't too helpful there. There were 380 million. Any comments on this one? There's a lot of comments, actually. Why is everyone... I don't know if there's any like crude oil. Yeah, the crude oil futures. Anyway, must just be following the positive momentum around oil prices. Let's do Resolve right here. RZLV. Yeah, thanks again, dude. Jackson with like freaking 100 roses, dude. I don't. Thanks again, dude. I appreciate you. And hey, we'll do Roblox. In Brookfield. Hey, Marcus, which Brookfield ticker symbol? There's like BAM and then there's like BA or I forget. Or it's like what's the Brookfield ticker symbol? Or is it just B or something? It's in 6 to 7 countries. Oh, okay. So here's Resolve AI stocks. So unfortunately, they have not done too well, probably just because all the software names are really struggling right now. So they're actually headquartered in the United Kingdom. Wait, really? Yeah, so they're headquartered in Greater London, headquartered in the UK. So they're not a US stock. Let's go look at their website. AI that transforms commerce to search to checkout. Strategic partnerships with Tether, Microsoft. So I guess here's their proposition. If you use us, you'll get a average order value of up 8%, 17% more things added to cart, 5 minutes less of customer wait times in stores, minus 50% drive-through service times. So if this is true, I mean, that's great news. I guess that's what they do. But do they have numbers? So, okay. So again, they're headquartered in London. So they report in halves. So for the first half, so for the first 6 months of 2025, they did 6 million of revenue. So it's good that they're getting their first ever sort of revenue, but before today, they've had no revenue. For the entire year 2024, they didn't do much. Or anyway, so not a great balance sheet, more liabilities than they have assets. I would just be careful. Like, dang, they lost 60 million in net income the first half and then 170 mil. It's like, I almost think it's too early for this company. I mean, their website seems really interesting though. So it kind of mimics sentiment. It's like I'd keep this one as a very low allocation, like a very small one. They're like getting their first ever sort of revenue. We want to see them continue this crazy growth. So interesting. Do you recommend buying now or is everything at a premium? Actually, no, a lot of stuff is pretty decently priced. Like Microsoft's pretty good. The stock actually bought today for the first time ever is ticker symbol MOG. Moog, we're up 0.8% on them. I just bought them right before the stream. Did a super in-depth deep dive on this one in my most recent YouTube video and the very beginning of the stream. So if you want to zoom out, or actually, best way to support me, by the way, I sell nothing. I have no course, book, what's up. I sell absolutely nothing. I'll never follow you, DM you. The only thing I do have, though, if you want to just support me and be nice, I have a YouTube channel I'm trying to build. My YouTube channel is called Nathan Robert. You can just type into YouTube, Nathan Robert, or it's in the link tree in my bio. I'm also streaming on there. You can like rewind it, but also my most recent YouTube video and at the very beginning of the stream, I deep dive into that. stock. I might go over them again if someone wants. Let's go over some more here. All right, thoughts on BX, please. Let's check it out. So, oh wait, we just looked at Blackstone. Hey, Eric, I think we looked at that one just like a couple minutes ago. Hey, what's up, Outwork? I appreciate you. Oh yeah, Brookfield, B in stock right here. So Brookfield right here. So this is another, I believe, like private equity, like asset manager. Or yeah, look, private equity, 40% of their revenue. So it's just like a Blackstone, pretty similar to a BlackRock. So they're also in infrastructure. Asset management, that's a great industry to be in because they just collect a high margin fee. Yeah, look at their infrastructure revenue. That's phenomenal. It's up 15% after they grew 23, after they grew 24. I don't know why I randomly remember this news, but I just remember they bought a bunch of cell towers in India off of American Tower Corp. So maybe that's part of their infrastructure business. I have no clue. What's the forward multiple on this company? Remember, Blackstone was at like a 10, so they don't have a forward PE. Maybe there's just no analyst covering this one. Let's see. So yeah, normally there would be some orange lines going out to the future. So just, or at least on my app, just no analysts cover this stock right here. Maybe there's a forward PE and some analyst on Webull. So over here says the forward PE is a 32, so they trade at 32 times net income, and they have a 0.6% dividend yield. They've actually done very well. But yeah, they are kind of falling right now. I know they do have some high quality assets. So yeah, shares of private credit companies are trading lower after BlackRock reports suggested that BlackRock limited redemption. So basically, they're limiting withdrawals. You can't withdraw from the private equity fund. Like if you put money into it, it's like a style, like they're not allowing you to withdraw your money so quick. So that's a lot of red flags right now for that whole industry. All right. Oh, Goldman Sachs, dude. What's up, Tino? Good to see you. Yeah, Goldman Sachs, this has been one of the best performing banks. Like, I'm shocked. Like, this is the 2019 price. It was 250. Now it's 820, and it's finally, off its all-time high to make it somewhat interesting to buy. No way, Isaiah. Dude, we did cover PSIX. We can look at it again, though, if you want me to look at it, Isaiah. Or if you have a different stock you want to look at, let me know. Dude, thanks again for that huge gift. We'll definitely check that out if you want. I think it's a steal. But I was happy, super happy with the earnings. So here's Goldman Sachs. What I like about this one is like, even though they've done so good, even if you buy the stock right now, you get nearly 2% of your money back in a dividend. That's phenomenal. Look how dramatically fast they raise a dividend, way faster than inflation. So you get 1.7% of your money back this year. It's going to be even more the next year. Your yield on cost continues to go higher as they raise their dividend. And the forward PE is only at 13. Again, that's kind of normal for the banks. It's kind of what the industry trades at. But like a 13 forward PE. That's why this stock's pretty good, pretty fair. They print net income. Look at this net income, easily like 4 to 5 or like 4 billion of after-tax net income a quarter. So 13 forward PE. I certainly wouldn't sell that one. Yo, shout out to Sarith, dude, the member. Thanks for becoming a YouTube member, dude. I really appreciate you. He says Snowflake stock. Let's check out this one, and then we'll look at SMH and some of these other ones. Let me know, Isaiah. Did you want me to look at PSIX? We'll definitely do that one. And hey, Matt, we'll try and get to Salesforce. There's just so many stocks I want to look at. I'm sorry. Hey, we're going to be live for another hour, so don't worry. We'll definitely get to all these stocks if y'all have some. So here's Snowflake. This is like a competitor to like Palantir. Like I really like their growth. Let's see. They just guided for revenue. They added, so the company, okay, so check out this where my cursor is. You can't see it on the TikTok stream, but it's kind of in the middle. The company signed 7 9-figure deals, including a record $400 million contract, added 740 net new customers to over 13,300 total. So that's insane. So they also rose their guidance. So let's go look at that. Yeah. So they beat on revenue, and most importantly, they lost less net income than expected, because the one big drag that's been on Snowflake stock has just been the fact that they burn a lot of money. Look at this, like historically, like 300 million a quarter, but it's great to see that they were expected to lose 340 and they only lost 309. So they're narrowing their losses at a much faster rate than analysts expected, which is great news. And look at this revenue. This is the most impressive part. If we zoom out, I mean, the revenue just literally hits a new record every year, every quarter. It's like so consistent. Like in 2020, the revenue was 100 mil a quarter. Now it's 1.28 billion just this quarter. And analysts aren't expecting the growth to stop. No, they're saying it go to 1.32 and then 1.43, especially with these new contracts that they're signing. They're getting like military contracts and a bunch of commercial contracts. So, um, they have like you can really put your data to use here. It's one of the like real AI like companies, like not like a ChatGPT wrapper or something. Like they really have good use for your data, like Palantir. Let's do oh yeah, SMH. This is a cool ETF because if you're like, I don't know, I hear a lot about data centers and AI and stuff. I want to get exposure to it, but I don't know which like AI stock to buy. Well, this is a pretty cool ETF that diversifies your money up for you into the entire industry. Like from Nvidia, who designs the chips, to Taiwan Semiconductor, who the fab who actually makes the chips for Nvidia, to Broadcom with their custom TPUs, to Micron in the memory shortage play, ASML, the lithography company making the chip making machines for Taiwan Semi and Nvidia. So it's pretty cool. And actually, like this Micron stock has actually led this ETF to do even better than Nvidia. Even though Nvidia is the largest holding, this ETF has been outperforming Nvidia because these like Micron and these memory shortage stocks like SanDisk have been picking up their slack. They're up way more than Nvidia's the past year. Same with like ASML as well. They're just doing really good. So I don't love buying it today, but this is certainly an ETF where if you're like, I want exposure to the AI industry, you put this on your watch list, and the next time there's a huge panic for AI stocks, like you could buy that ETF or something. Diversifies your money up for you. It's a more disciplined approach. I like it. Hey, I'm really good, Outwork. How are you, brother? Gold will probably go higher. Yeah, the price for gold is ticker symbol IAU, or that's the actual literally commodity of gold in an ETF. So it's pretty cool. And it's done phenomenal. So yeah, congrats if you own gold. You know, you got to be up on your money. And yo, Jackson, dude, I can't believe it. He just gave so many hello Nathan, loved your deep dive on Moog, added to my order. Yo, egg mayo, dude, I really appreciate you watching that video. I actually thought it was one of my like best videos I've made in a while. I'm really happy with Moog. I just also bought them for the first time ever today. I'm so impressed. You can hit the dislike button if you don't enjoy that video. I promise you, there's so much good news to say. I just can't get into it right now because I'd speak for 10 minutes on it. Okay, we'll do SoFi after this. Dude, Jackson, again, dude, you just gifted like friggin' 100 roses. I really appreciate you, my guy. Thank you so much. So just call me, said ARLO. Let's do ARLO, then we'll do SoFi. I am a shareholder of SoFi, so. And hey, what's up? Lois said FIX. It's not the best buy right now, but maybe for the slightest nibble. I might actually deep dive into Comfort Systems if you want me to. So here's Arlo Technologies. They're a $1.48 billion company. So subscription. So I love subscription model companies. You know, it's all like reoccurring revenue. And that grew 29% year over year, after grew 21, after grew 44. So they're on a nice streak of growth. And then their products revenue. So their products revenue is actually negative. That fell 21% year over year. So it's kind of like a mixed bag of one business is growing and the other one's kind of struggling. 50% of the revenue comes from the US. Sweden is 10%. Spain is 30%. So it's kind of a cool international exposure too. They are profitable. That's phenomenal. So if we zoom out, you know, they used to never make any money. But now it looks like they're making good money, like a couple million of net income a quarter. Let's see, our analysts projecting that to stay. Yeah, so they're expected to make 5 mil next quarter and 6 mil the quarter after. And the revenue is supposed to go to 144. So interesting subscription play here. They probably still have a high forward PE, but that's, again, they have a high forward PE because they're just now making their first ever sort of E or earnings in their EPS. So 56 forward PE. It's an interesting software name for sure. Maybe I can check out their website, a cloud company, they're saying. Shop products. What products did they sell? Remember, the products revenue was down like 30%. Oh, so they smell or sell, I guess, like security devices. I guess, I believe like one thing, like Apple is getting into this space right now. And you know who's the other one really in this space is Ubiquiti. If anyone's heard of Ubiquiti before. So that's a pretty cool name. Let's get to SoFi, dude. Thanks again for those big gifts there. I'll kind of give you my highlights. Let's see if there's any news. Oh, yeah. So SoFi launches SoFi USD stablecoin. First national bank, chartered bank to issue a stablecoin on a public blockchain. Pretty cool. SoFi CEO purchases 1 million worth of shares. Pretty cool. SoFi launches Solana network deposits for cryptocurrency support. So anyway, one thing I love about SoFi is how cheap the forward PE is. Like this is the cheapest forward PE I've ever seen on SoFi. A 28. Like especially compared that to their current PE of a 48, like the 28 forward PE is what I love about them. And here's why they certainly deserve a 28 forward PE, and I think a higher forward PE than that because of how growthy they are. If we go to their financial services specifically, this is the part that's beating all expectations. Like look at these year-over-year growth rates in the middle. It's up 78, after grew 85, after grew 115, after grew 290, after grew 601. Like it's just like no analyst expected this sort of growth. Like a year ago, I did not expect them to continue to have that sort of growth. And we can see the analyst expectations every quarter they beat on revenue and on net income. Look at this. They expected 152, they did 173, and the net income's projected to go way higher to 200 mil in 2 quarters. So that's why I really think people are taking SoFi serious. They're making over 100, close to now 200 mil plus a net income a quarter. Revenue just hits a new record every year, every quarter. So that's why they're a phenomenal growth stock. And I can't believe they're at a 29 forward PE. I'm actually looking to potentially buy a slight bit more of them because I do own them just the slightest bit. I only have 24 shares, but I am looking to buy a little bit more of them. Yeah, well, look, I love being fully transparent. Here's our all-time performance in here. We're only up 7.3%, down 1.3% on the day. What's down the most? Dave, AMD's down. All right. All right. Gosh, there's so many stocks I want to get to. I do apologize again if I'm missing some stocks here. There's just so many good ones. Someone said LASR. Yeah, LASR. Wait, is that the company? I actually just put this stock on my watch. This is a pretty cool company right here. LASR. So I can see why they have done so well. It's kind of like a growth stock. Like you obviously don't buy them now, but I actually added them to my watch list yesterday because I found them pretty interesting. This is Inlight stock right here. And when you exclude the one-time adjustment that they had, they are doing pretty well. So here's their laser products. That's up 15% year over year. Advanced development products, that's up 30% year over year. So if we just go to revenue down here, they're finally bringing the growth back. So the total revenue grew 71% year over year. So the revenue's up 71, and they're narrowing their net income losses. So they're only losing a couple mil in net income. And like when you narrow your losses this quickly, I wonder what the net income is going to be this same time next year. Let's see, is there a projected? So they're projected, I guess, to still lose net income for the next 2 quarters. But anyway, I haven't done too much deep dive. Like I really haven't done really any research on this company because I was looking at a bunch of stocks and I bought Moog, that Moog stock. That one is just so impressive to me. They just forced me to cancel my credit card because I decided to charge an annual fee now. Yo, what banker or I don't know what he's, yo, that sucks, SL. So, hey, what's up, Nick? Good to see you, homie. Let's do Salesforce. Yeah, Matt, my bad, man. Let's do Salesforce for him. And then we'll do Intel and Apple, JP Morgan. Oh, what's up, Logan and Wookie? Good to see you on It's 1327. What's up, y'all? So here's Salesforce. Yeah, this is like the most popular software stock. Let's see if there's any news around Salesforce right now. They update 2030 revenue target to $63 billion. Salesforce Agentforce annual recurring revenue, or ARR, reaches $800 million with 170% year-over-year growth. Salesforce completes the $10 billion acquisition of Informatica. Oh my goodness, yeah. I actually want to pull up that stock. Salesforce CEO dismisses the SaaS apocalypse, the software apocalypse. So let's see. Hold on here. I want to pull up INFA. So this is the company. It's delisted now because Salesforce just bought them. Actually, it might still be on Webull. Basically, what's cool is, yeah, here it is. So this is the stock Salesforce just bought for $10 billion. So basically all this revenue right here, every single quarter for the rest of the time, basically $400 million in revenue a quarter is now going to be added onto Salesforce's numbers right here. So yeah, they're very diversified. They're in services, they're in sales. And my favorite part is their Slack platform. So many S&P 500 companies use Slack, like Amazon, for example. It's up, this is incredible, 38% year over year. So this was one of the most expensive acquisitions in history. I think they bought Slack for like $50 billion back in like 2021, but it's great. Yeah, it's 60% of the revenue comes from the US. And what's the forward multiple? I think it's still like dog cheap. Let's see. Or yeah, 24 forward PE. So they're not expecting much EPS growth, weirdly. But again, it's kind of, I guess, like look at how they're beating on expectations every quarter. So they really at like a 21 forward PE. If they keep beating like this, like they expected $1.56, they did $2. Last quarter, they did $1.62. They did $2.19. So yeah, we kind of want to. And again, they're going to come back to this double-digit growth because they're acquiring. I mean, this agent force annual recurring revenue. Wow, manage 50% of customers, 17% reduction in support cost, 63 billion annual revenue target. Well, what's it now? 41 billion for the fiscal 2026. So, wow, there's still a lot of upside growth potentially. Maybe he updated the revenue because of the acquisition, but so. We looked at Goldman Sachs a second ago. Another great bank is just JP Morgan. You'd be shocked. Hmm. Oh, for SoFi, okay. So here's JP Morgan, a great dividend growth stock. If you like a little bit of income, JP Morgan pays a good dividend. If you buy the stock right now, you get, no matter what, for the rest of time, 2% of your money back just in a qualified dividend every year. So you get 2% of your money in dividends every year. And historically, you get like 5 to 6% stock price appreciation on top of that every year for like a 7 to, or really like an 8% total return a year. And look at their net income. It's pretty ridiculous. They're literally making 14 billion of net income a quarter. So no wonder they're worth, what's it, 770 billion, and that's still not even like crazy expensive. They only trade at 13 times next year's net income. So the net income is projected to grow. Yeah, commercial and investment bank. Yeah, they're in asset and wealth management. So they're managing people's wealth and they collect a high margin fee every year for doing that. So yeah, JP Morgan's a great bank. Same with Goldman Sachs. KVYO. Let's do KVYO. And then we'll do, oh, hey, Sirit. Oh, let's do Duolingo. Oh, I have some good thoughts about Duolingo. And then we can do Apple. Yeah, what's up, Zero? We can do Apple too. Yeah. Sorry if I'm missing some. I'm reading both chats, the YouTube and the TikTok. Sorry if I'm a little behind here, missing some stocks. Feel free to re-say them in the chat if I missed them. So I've never heard of this one, Clavio. Hopefully I'm saying that right. They've been public for about 2 years. Let's see what they do. I'm guessing a pharmaceutical company. No, okay. So they're actually a software company, a SaaS company, offers e-commerce marketing reinvented for stores on Shopify, BigCommerce, and Magento. So they help out people on Shopify. Huh. I guess they may be customer support agent, maybe a better looking website, 193,000 brands, business to customer, but CRM for it. Finally, an AI first business to consumer CRM. So they're an AI marketing service, analytics, data platform. It kind of reminds me of Salesforce. Maybe it's like a mini Salesforce or something like that. Well, let's go look at their numbers because that's what matters. 60% of the revenue comes from the US. Let's go to revenue though. Yeah, that is what you want to see. Actually, I like HubSpot too. HubSpot's pretty good right now. But the revenue just hits a new record every year, every quarter. It's up 30% year over year to 350 million. But look at okay, so they're barely losing any money anymore. This quarter, they only lost $1.8 million. So they're significantly narrowing their losses. So maybe by this time next year, they're going to be making net income. Yeah, look at that. They're expected to make 9 million next quarter. Pretty interesting. Yeah, probably just falling because of all software stocks are falling. And yeah, it's having that nice little rebound like all the software stocks are having right now. So nice. Ooh, should we do Apple or let's do Duolingo. So ooh, Isaiah, dude. Thanks so much, dude, for that gift. We'll do CoreWeave. Hey, what's up, Adrian? Good to see you, man. So here's Duolingo right here. This is that language learning app, and it's really the thesis that's being heard on Duolingo. So kind of think about this. this is an app you download to learn a language. You pay them a subscription every month to do it. But they're saying in like 10 years from now, will the technology be so good that, like your Meta Ray-Ban glasses, like live translates audio, like where it's like actually so good, where it's like not laggy or anything, like the live translation technology is so good, where you really or people just don't need to learn a new language anymore. So let's see. Duolingo issues full year 2026 guidance below consensus and bookings growth of 11%. I think so they expected 20% bookings growth and they only had 11%. So the Duolingo CEO attributes the 2026 margin decline to higher AI in marketing spend. Video call feature costs down are now tenfold. Well, that's good, but they did a 400 million buyback program. What's their market cap? That's almost 10% of all the shares. So what you really look at on Duolingo is the forward PE, because they had a total one-time adjustment. So really, this is the kind of sad truth. Even at this all-time low level or multi-year low level, they're not like exactly cheap at a 31 forward PE. So they trade at 31 times next year's net income. But here's my favorite part about Duolingo is how consistent this subscription revenue grows. Like, this is why I'm not completely dismissing Duolingo. This impresses me. This subscription revenue is up like literally every quarter in the middle. It's up either 45 or 50% every quarter. And it's just always growing that fast. And not just their subscription revenue growing, but also their advertising revenue. That's up 45% year over year. Again, they just reported new earnings and lowered their guidance. And here's why you don't look at the current PE ratio. It says it's an 11. It's not actually, because it says last quarter they made 292 million. They only made 35 million, but this was still a phenomenal quarter for profits. So I would just keep the allocation of this stock low. Oh yeah, they've been deleveraging their balance sheet. That looks great. Free cash flow is really good too. Let's see the actual free cash flow metric. Yeah, nearly 80 to 100 million in free cash flow quarter. So yeah, it's still good. I would just keep the allocation of that one low. It's just what you think about that long-term thesis. Let's do Apple. Yeah, what's up, Zero? CoreWeave next. Oh my goodness, we forgot about that one. Yeah, Isaiah, dude, thanks again for that huge gift. We'll do CoreWeave next. So here's Apple right here. I'm on an Apple iPhone. A lot of people like Apple devices and they're like locked in the Apple ecosystem. And iPhones are most of their business. 60% of all their revenue comes from their iPhone sales. And they've actually had a nice little kick up this quarter. It grew 23% year over year from the new AI features on the smartphones. They're just selling well, I guess. But the other most best part about Apple is actually their services business. So whenever you go spend money in the App Store, like you spend $100 in the App Store, Apple keeps $30 of that. They keep a 30%, they call it a developer fee. So if you could do any transaction in the App Store, 30% of it goes back to Apple as a royalty. And this is their 100% margin business. It's up 14 after grew 14 after grew 16. So this is very consistent growth on their services business. Yeah, then they have their wearables like their AirPods, iPad revenue, MacBooks. And here's why they're also a bit affected by tariffs, because I always thought it was more, but only 36% of Apple's revenue comes from the US. Europe is 26, China's 16%. They actually had really good China numbers. iPhone sales in China were really good. Yeah, look at this. Wow, that's incredible. So they did 143 billion of revenue. Out of the 143 billion in revenue, they netted $42 billion. That's after they paid $8 billion in taxes. So they really did keep $42 billion in net income. And Apple does the most buybacks out of any company in the world that exists. They literally buy back a year $100 billion of their own stock. Because they're not spending on chips. They're not training their own model. Their cash from investing activities is nothing. Like on Google, Meta, Amazon, it's insane. They're spending so much, but not Apple. They're kind of like a safe haven. They're being rewarded for not spending so much on AI. Yeah, they even make their own smartphone chip. The smartphone chip market share is in 18%. Yeah, their services margin is really high. So anyway, I'm a big fan of Apple. They're expensive though at a 30 forward PE. I think Google's at a 26, Meta's at a 22, Microsoft's at a 24. But it's a great never sell stock, and their buybacks are just insane. And it's a great dividend growth stock. So let's do CoreWeave. Yeah, that's a big holding of Nvidia. If we go back to the Nvidia portfolio right here, actually Nvidia's largest holding is Intel. To kind of please the government, and then CoreWeave as well. So basically, the only reason Nvidia owns CoreWeave is because CoreWeave's buying a boatload of their chips. So CoreWeave basically is they're taking out debt and buying a boatload of Nvidia chips, like bulk orders, and they're actually undercutting every competitor's price, where if you want to rent out the capacity of their GPUs, they're undercutting the price of every competitor. So I don't know how sustainable this business model is in the long run. Like, I don't love the long-term thesis here. Like, the top line growth is insane. Like, look at this. The revenue's up like triple digits for the past 5 quarters in a row. It's 1.57 billion, and it's not stopping. It's supposed to go to 1.96 and then 2.7 billion the quarter after. But notice, look, this is the margin part I'm talking about. Notice how the revenue is going to go from 1.2 to 2.7. So the revenue is going to double year over year. Revenue is going to double. Net income is going to double. The losses are going to double. So they're going to lose over 560 million. So the loss, they're losing more and more. I just, like, again, there's nothing proprietary here. All they do is own Nvidia chips in a data center. And it's just not a business model I'm such a big fan of in the long run. But I think short term, they're like a nice Nvidia proxy. Like, they'll probably do good through the end of the decade, but it's not a great long-term hold in my opinion. But I didn't mean to be too bearish on that one. Now that kind of sounded but hey, thanks again for that suggestion. So SES Secure Waste. Let me know the ticker symbol for SES Secure Waste, Canadian company. In waste management, I like them. Oh yeah, let's do waste management. This is a great example of a boring but great stock. Literally, like, this is like an AI-proof stock. Everyone, like, Americans are wasteful. Everyone throws away trash, and that trash has got to go somewhere to landfills. They actually have a really valuable real estate portfolio with their landfills, but it's a great company that pays a dividend. Even at all-time highs, they have a 1.4% dividend yield, and they just print net income every quarter, like easily 700 plus million in net income a quarter. They had a slight one-time adjustment last quarter because they bought this medical disposal business company for like $9 billion. And, there's some smart people that like this stock too. Bill Gates, the Bill and Melinda Gates Foundation, they own 7% of all the shares. And it's at an all-time high today. So it's showing off its defense today. Congrats if you own Waste Management. Hey, what's up, Stalin? Good evening, man. Good to see you. Have you done Zeta yet? I've actually not done Zeta Global. I was just looking into this company called Marigold. They actually just acquired this company called Marigold. It's an advertising company for $400 million. And I was on their website. It's a very interesting, cool advertising company. So Zeta's acquiring them for mostly stock. What I've liked about this company is the top line growth and how they're just now getting profitable. So look at that revenue. Like, that's what you want to see. And the revenue isn't done here. It's going to continue to climb higher because of the acquisition. So actually, we can see the analyst forecast. Look, it's going to go from 308 million to 415 million revenue. So they're almost going to be doing, 2 billion of revenue a year, which is just crazy. And the whole company is worth, what's they worth? 4.5 billion. And they're just now getting net income positive. So if we zoom out, they used to lose a lot of net income every quarter. Look at how they've significantly narrowed the losses to the point where they're actually going to now, for potentially the rest of the time, going to be making net income every quarter. Like this quarter, they were expected to lose 8 million, but they made 6.5 million. It was good earnings, and they beat on revenue too. So actually, I really like Zeta. It's a good software name. I got Monster Energy Drink. Oh, hey, Aaron, are you still here? I'll check out SSTK. My bad. If you're still here, Aaron, we'll check out SSTK. Kavan said PRSO. Then we'll do, can you do Monster Energy Drink? It's a good stock to have. Yeah, Monster Energy Drink is pretty cool. Wait, PRSO. So this is actually, we're not going to cover this one. If you look in the very top right, this whole entire company is only worth $15 million. They're at an all-time low. Because of all the reverse splits, this used to be a $161,000 stock. Again, it wasn't actually, it was just because of the reverse splits. So this used to be a multi-billion dollar company. Now they're worth only 16 million. So let's see. So there's just like bankruptcy risk here. Yeah, like the revenue's nothing. It's down 15%, only 3 million, losing $1 million a quarter. I would just be so careful with this one. It could be a fun little short-term swing trade. Like I see they're up 100% today, but it's just like at that market cap of 15 million, it's just like I always avoid those kind of stocks because it's like you solely buy that just to swing trade it. I'm interested to trade in US stocks and US futures. Oh, hey, nice. Let's see. SSTK. Hey, what up, Professional Pumpkin or Professor Pumpkin? Good to see y'all. What up, Carnage? He said, boring. Oh, what's up, Carnage? Sorry. 6 star. Oh, hey, we'll check out these two and energy drink. Okay, so here's Shutterstock. This is like a picture royalty company, or I don't even know how to describe this stock. You just like buy pictures off their website. They actually have a forward PE of a 9. That's actually ridiculously cheap. So they trade at 9 times next year's net income, and the current PE is a 14. Huh. So what are the net income projections? Let's see. So maybe they had a one-time adjustment this quarter. It says they lost 16 million, but they're expected to make 16 million and then 19 million the quarter after. Huh. So the revenue did decline year over year. Revenue's down 12%. I don't know if this is going to get overtaken by AI, like AI generating photos, but whoa. Okay, so this is a dividend play. I didn't even realize they have a 7.5% dividend yield. Here's their website. Yeah, shutterstock.com. I feel like I've heard of them before. Like, oh yeah, they're getting into AI. They're not going to let AI overtake them. C pricing. How much are they? So it's like a subscription company. For $25 a month, you can download just 10 images per month. Anyway, some kind, I don't know. Nothing's blowing me away there. But the forward PE is a 9. I mean, if that's true, I mean, that's really good. So here's Monster Beverage. Yeah, this is a great company. They get so much like free advertising, and they mainly return money to shareholders via stock buybacks. So check out this. I'll call it a monster balance sheet because they have no debt at all. So they have no debt, and they make a net income 400 to 500 million of net income a quarter. So what are they doing with all this net income? Because they don't pay a dividend, they don't have debt to pay. They're just buying back their own stock like crazy. That's why the stock like never goes down, because they bought back like 10% of the stock this year, 5%, 6%, 5%. So they're just buying back their own stock like crazy, which just helps out the EPS, gives you more ownership in the company. It just helps out the shareholder a bunch. So, and they had impressive numbers like Monster Energy Drink. This quarter specifically, I don't think analysts expected this. It grew 19%, record sales. It grew 19%, after grew 5, after grew 15. So like the growth rate's growing, which is good. They are probably a little pricey on a forward PE. Yeah, 33 forward PE, but that's just because they're so quality. Actually, on the Monster bottler, Coca-Cola Consolidated, they're the largest bottler for Monster. They bottle their beverages for them. So that's one I own. They also do massive buybacks. Oh, I should have pulled up the stock buybacks on Monster. You know what? I'll show you. Because I find it so cool, let me pull it up. I'll just pull up the total common shares outstanding metric. Monster's a $73 billion company. That's insane. But yeah, so check this out. Actually, because they did a stock split. Oh, that's going to mess it up because they did a stock split. Well, anyway, because I wanted to go farther out than 2022. So basically the shares went from 1.05. There was 1.05 billion shares. Now there's only 978. That doesn't look too impressive, but anyway. Okay. Yeah, Monster has been like incredibly impressive on how they perform. Okay, next up we should do how about Matt said BB stock? Is that BlackBerry stock? They kind of lost the smartphone war to like Apple. Like if we zoom out, obviously BlackBerry in the year 2000 was $120 and it's a $3 stock today. So what do they do now? So QNX, I'm not sure what that is, but that business is up 10% year over year. That's good. They're also in secure communications, but look at these year over year declines. Yikes, it's down 10% after it fell 18, after it fell 28, after it fell 7.5. So that's not good. But their other business was growing. Is there any kind of recap here? So the QNX division achieved record revenue of 68 million, fueled by automotive royalties and software-defined vehicle adoption. So BlackBerry's in some sort of automotive royalty company. I don't even know that. See, it's a whole completely different business model than what it used to be. Look at that. And they're actually making profits. No way. So they actually did make net income the past 3 quarters in a row. So that's quite impressive. But look at the revenue though. So when we combine the two businesses, the sales actually decline, like the lifeblood, the revenue of the company. It's negative 1.5 or 1.25 after it fell 5. So we kind of, I don't think this is the kind of stock that's really look at the revenue over time. I just don't know if this is the kind of stock that's going to outperform the tech-heavy S&P 500. But I'd just be so careful. I keep the allocation of that one really low. I probably just wouldn't own them. As a monster tastes like RXRX. Hey, I think does Nvidia own that stock too, or do they still own that stock? I actually don't. That's like a research and development company. Wait, let's see. It's sold out of. Wow. So Nvidia completely sold this quarter all their shares of RXRX, and I can see why, because sadly, like I really and I've really tried to give them the benefit of the doubt in every way. I can't find anything good about this company. They're at an all-time low, and I can kind of understand why, unfortunately. So here's the thing. If we look in the top right, how much is this whole company worth? The whole company is worth $1.8 billion. So the whole company's worth $1.8 billion. Here's the bad news. They lose, if they lose $180 million, that's 10% of the entire company. And they lost $160 million just this quarter, $170, $200 mil. So they've lost 30 to 40% of the entire company just in the past year. And that's, just this year. And I bet you're wondering, well, if they're losing all this money, are the sales at least growing? No. Revenue is down 80% year over year to just $5 million of revenue, losing 100 to 200 mil a quarter. They're having to issue they literally diluted you by $250 million to afford these net income losses. So they're literally diluting you while the stock is at an all-time low. This is a stock I sadly would not recommend at all, because it's just like the financials are really scary, and there might be some real bankruptcy risk. Hopefully that was kind of helpful there. Thoughts on Viola? Oh, hey, actually, we found that one for you. So this must be like a European stock. Yeah, so we'll convert the currency to US dollars. So this is Viola Environment. Okay, so they're actually out on cheap forward multiple. They're only at 14 times next year's net income. So 43% of the revenue comes from Europe. They're in wafer technologies. So, so that's weird. We don't actually get their recent data over here because they're in ADR, and this app is weird. Like, we only get the revenue from 2008, but it's weird because it says here's the 2025 data. And yeah, 2025 data down here as well, but it's just not on net income. I don't get their income statement. And there's no analyst covering this stock either. But it says there's a 14 forward PE. Interesting. They have actually a 4% plus dividend yield. So yeah, it looks like, according to their website, they manage water supplies and distribution and provides waste management services. Oh, okay. Yeah, disagree and close. Okay, I can't read this language, but I guess here's their website. I wish I could give you better thoughts on them, unfortunately. Okay. What is IJH? Is that an ETF actually? So this is the iShares mid-cap ETF. I love mid-caps. I own a lot of mid-caps myself. Let's see what their top holdings are. I potentially own some of them. Light, Coherent, Curtiss-Wright, XPO, Casey's has done really good. Royal Gold, UTHR. Yeah, these are good mid-caps. Yeah. And again, each mid-cap, I like that. It's only like its largest holding is only 1.44% of the ETF. Like, they're very diversified. So yeah, that's an interesting ETF right there. ServiceNow ticker symbol now. One of the most elite SaaS moats. 98% customer retention rate. Let's check it out. This is a great subscription model company, and I think they're doing an acquisition. Or I don't remember. Let's see. ServiceNow CEO defends AI value to software companies, announces new public sector AI service. ServiceNow launches autonomous workforce solution and integrates MoveWorks into AI platform. They maintain buy rating on ServiceNow amid AI disruption concerns. So what I like about this company is how growthy they are. So if we just go to their revenue down here, like, this is really what you want to see for a software stock. Like it's so consistent every quarter. Like here's the 2016 numbers. It was 340 mil a quarter. Now it's 3.5 billion a quarter. Like software is so good. It's high margin. Like look at their net income. It's not just revenue, but here's their after-tax net income. This quarter they made 401 million after they paid 40 million of taxes. Like they really are making 4 to 500 million of after-tax net income a quarter. The free cash flow is even better. 2 billion of free cash flow just this quarter. Analysts are expecting it to continue to climb higher as well. Revenue is going to go from 3.2 to 3.86. So, hey, pretty interesting software name. They're probably a little expensive, but that's because like so they're at a 52 forward PE. They're so quality. Like this is the cheapest they've like ever traded at though. I really do like ServiceNow. One of the better software names. JEF. What is JEF? Someone said buy Tesla. I think Tesla's great. Palantir. Oh, we'll do Palantir. All right. Hey, yeah. We'll look at Tesla after this too. I actually haven't looked at Tesla in a really long time. Do you like ServiceNow or Salesforce? I like both of them. They're very similar. Like the stocks kind of move together. So both are pretty good. So here's Jefferies Financial. They're struggling right now. They're down 11% today. Whoa. They're like Western Alliance sues Jefferies over unpaid commercial debt and they're not paying their collateral or something. That's weird. Investment banking and capital markets. How's that growing quarterly? Wow, this quarter specifically, it jumped up 209%. Did they like buy a company or something? I don't know. But yeah, here's their net income. It looks like they're easily making like 150 to 250 million of after-tax net income a quarter. Revenue, so revenue is a little choppy, like it's up 2%. Sometimes it's negative, but the forward multiple is an 8.5. I guess there's just a lot of weird news around. Is this true that like they're being sued over not paying back debt? Like it's kind of odd, huh? Oh, the regular Monster isn't very good, but the white can, yo, I also like it's called like Mango Loco. I really like that flavor of Monster. Haven't had one in a long time though. Let's check out Cormedix right here. Unfortunately, I don't think their earnings have updated yet down here. Yeah, so they haven't updated yet because they just reported earnings. But yeah, this is one of the stocks I'm down bad on. And I've always recommended, like, if you're going to buy this stock, you got to keep it as a super small position. Like, you cannot trust a meaningful amount of money in this stock. But this whole company, look at them. I'm down 40% on my shares. $500 position for me. This whole entire company is worth, if you look in the top right, 490 million. And it's just like a micro cap that, like, if you're looking for a micro cap to buy, out of all the micro caps worth 490 million, this is my favorite one. They have actually 120 million in net cash. So literally over 10% of what you're paying is just their net cash on hand. And they're projected to make great net income. They had a one-time adjustment this quarter from their Malenta acquisition, but they're supposed to make 45 million net income next quarter. Again, the whole company's worth 490 million. So when you make 45 million, that's 10% of your whole market cap. And then the quarter after, 42 million. Revenue is going to go from 39 to 93. They literally have insane gross margins, like 95% gross margins. So I'm very slightly nibbling. I just bought like 4 shares of this stock. Not much, but and again, you don't want this as like a meaningful size position in your portfolio, but I really like the long-term thesis. Like really am excited. I was just talking to people about this. I'm really excited, like the 3 to 5 year time horizon. Like I'm so excited to see what happens like 3 to 5 years. And the risk to reward looks pretty good, just to like slightly nibble. So let me do Palantir, then Tesla. So Palantir, then Tesla for sure. So Palantir is one of my favorite stocks. Unfortunately, they're just too expensive. I'd love to own them, but they're just way too expensive. So Palantir actually benefits from the US-Iran conflict as defense AI demand surges, and they actually secured a $1 billion DHS contract and a $10 billion Army deal. So if you didn't know, a lot of this company's revenue, or 53% of it, actually comes from the government. So many police stations, the Army, the military, Air Force, all that, use Palantir, and look at their government revenue. This growth rate is absolutely impressive, and this is the highest growth rate on the screen. It's up 60%, after grew 41, after grew 10. So the growth rate is literally growing on the government revenue, and it's not done there. So that grew 60%. the commercial side with other S&P 500 companies like Google and GE Aerospace, this is up 82% year over year. They're just securing so many good contracts. It's up 82 after 30, after 31. Like no analyst expected that sort of growth. Like they beat like crazy every quarter. They expected 460. They did six. Oh no, this is net income. Sorry, this is net income. Even more impressive. They expected 460. They did 608. Like, and they have no debt. Just to like cherry on top, just takes a lot of risk off the table. They don't owe anyone any money. They have no debt. They print free cash flow, and the net income is up triple digits the past 3-4 quarters in a row, and it's only expected to go up higher. You know, net income is just up and to the right, the expectations, and it's they always beat every quarter. So, and with this new, you know, military contract, you know, yeah. Whoa, Palantir, you know, they benefit from the Iran contract. Palantir co-founder sells 2 million shares for 300 million. This guy is loaded. Holy smokes. Guy owns 300, just casually sells 300 million of Palantir shares. Oh, well, they're worth like, dang, I guess he deserves it. He held on and didn't sell before today. Yo, Isaiah with the crazy gift, dude. He just gifted a heart, a hand heart. Yo, I appreciate that, Isaiah. Yeah, we'll definitely check out this stock. I want to go over Tesla, and then we'll do a deep dive on Astera Labs. I think that's another kind of oh no, Astera Labs. I love that stock. I love Astera Labs actually. I think they have a big partnership with ARM right now. So here's Tesla. Unfortunately, I just cannot buy the stock because of the unrealistic valuations. Like I literally go off what the analysts say. I'm looking at the 2028 and 2029 future EPS projections. And even on like 2028, 2029 numbers, they're literally trading at over 100 times earnings multiple years out from now. So unfortunately, like, and they're just such a different story than any other stock I've seen. And, you know, like they're these EPS projections, they're expecting all this revenue from like robots and robo-taxis, but like Waymo is already eating them at their lunch. And Amazon and these Chinese companies are doing great with robotics at the same time, while Tesla is actually negative growth. Like this is the bad news. This is why I cannot believe how much of a disconnect between the fundamentals and stock price of Tesla is. And I just can't pay for so much future uncertainty and so much future premium. But that all being said, Tesla's a mind of its own and it'll probably just continue to climb higher. But this is why I judge a company off their financials and valuation. I can't trust them. The revenue is negative year over year. So sales are negative 3% year over year. So revenue's down 3%. But here's the crazy news. The net income is down by 60. And look at these net income declines all the past 5 quarters in a row. Unfortunately, Tesla's margins are being squeezed like we've never seen before. Tesla used to run at a really healthy, you know, for selling cars, 17, 15% net margin. I kid you not. The margin collapse is really scary at Tesla. It's down 60%, very low single digit margins. So yeah, look at the automotive business. The automotive revenue here, it's literally like, it's negative growth. So that's why, unfortunately, I can't pay. Dude, Norbello, or Norbiro. Dude, thank you very much for becoming a YouTube member, dude. I want to just say thank you so much for that. It actually gets you access to my Discord. If you want to, it'll let you in. I have like a community post. But thanks so much, Norbello. I really appreciate you, man. Yeah, if you want to hit the follow button, I just stream every day. Just on here, give my opinion. Sell nothing. I have no course, book. No, I don't coach. I literally sell nothing. Just on here, give my opinion. The only thing I do have, I guess, is a Discord. I literally made the Discord. It costs $1 to join the Discord simply because I had one and it just so many scammers. I love that it's a small community. So, okay. Anyway, in the most recent report, Elon said Tesla is now an AI company. Oh, you know what? Let's go look at the Tesla news. Actually, wait, what did Tesla UK deliveries fall by 37% in February amid rising Chinese EV competition? Yo, those, what are they called? BYD cars are like $6,000 for like an actual, like pretty good working car. It's actually nuts. How cheap they get these Chinese cars out. So Tesla prepares April Cybercab production using new unboxed manufacturing process. Tesla plans 20 billion CapEx for robotics push. Tesla completes first supervised autonomous driving road tests in Abu Dhabi. Ooh, but then there's the bearish news. Hey, let's just not look at all these bearish news down here. Yeah, like Waymo expands to 10 cities. Tesla China launches 7-year low. Tesla Cybercab leaves. Actually, Tesla records zero autonomous testing miles in California. Zero autonomous testing miles. Wait, what did that say? Samsung Texas fab production delay may impact Tesla AI chip supply. Tesla AI chip, huh? Aren't they like buying XAI, or didn't they like merge with XAI a little bit? I don't know. But yeah, thanks again, Norbo. I appreciate you. So what? Oh, Isaiah. Yeah, he said Astera Labs. Now, this is a growth stock I think you guys will find impressive. Not financial advice. If you're looking for a new AI stock, this one, I would happily consider owning this company. And they're expensive at right now's valuation, but they're expensive for a reason. They're at a 72 forward PE. Here's why I really like this stock. First off, check out how they're beating on expectations. Or let me just zoom out down here and show you the revenue zoomed out. Like, this needs to be rewarded. They had no revenue in 2023. It was like 10 million. Now, just this quarter, it's 270 million. And not just 270 million of revenue, but they're printing net income now. They made 45 million of net income on that. These year-over-year growth rates on the net income are even better. So what's their net margin? Yeah, great 20 to 30% net margins, and a huge another like safety net, takes a lot of risk off the table, is they have no debt. They don't owe anyone any money. So anytime they notice their assets grow every quarter, anytime they make net income and free cash flow, what's the free cash flow? Yeah, up 200% to, it just stays on their balance sheet. So let's see the cash. They now have 1.2 or 1.19 billion of cash, up from 900 mil. And most of those are in short-term investments, which I looked, they're 1 to 3 week treasury bills. So basically they just earn interest every 1 to 3 weeks on this. So they literally make, just on interest on their cash, they made 12 million this quarter just in interest. And every quarter they're making like 10 to 11 million of just interest on their cash. So a lot of companies right now are being punished if they have a lot of unsustainable debt, paying a lot of high interest. This is a company that has so much net cash that they're literally earning interest on their cash, and that just adds money to your bottom line. Plus this amazing top line growth. Let's see if there's any news. Loop Capital raises price target to 250. It's at 121 today. Let's see. Remains bullish with the 225 price target, reaffirms copper interconnect technology value. Yeah, they have a big, so they reaffirmed its bullish stance on Astera Labs amid market concerns over packaged object technology. They're like the interconnect, almost like an Amphenol, like a semiconductor play. I wonder if we can pull up their website right here. So I guess here's some of their they're just like an AI infrastructure play. Chip material. Okay. Hopefully that was kind of helpful there. Mainly, I don't know too much about the actual business, but those financials, that top line growth, that bottom line growth, the fact that they're printing that net income with no debt, making interest, there's some things that to find fascinating. That's why they deserve that high multiple. And I'd maybe consider them. Let's see here. For me, I just stick to A to Z ticker and a few indexes. Tesla will end up as a software company. Yeah, maybe Tesla will, they'll have full self-driving, like reoccurring revenue like that. Hey, yeah, no problem, Isaiah. Yo, you don't have to give another gift. If you have another stock you can look at, let me know. Cast said SEHD. This is a dividend-focused ETF. Ooh, then we'll look at Abercrombie and Fitch. So this is really a dividend-focused ETF. If you look at the yield, you get 3.4% of your money back just in a dividend every year. So no matter what this ETF does, you get 3.5% of your money back just in a qualified dividend every year. And here's what the stocks it actually owns. It owns a lot of those companies that pay like a 3.5% dividend, like a Lockheed Martin, a ConocoPhillips, which is an oil and gas stock. And as we know, oil and gas stocks are doing great right now. Not great for the next time we go refill our tanks, but oil stocks have been a nice defense. Like Chevron, yeah, look at Chevron right now. Pretty much all-time high. These oil stocks have nice dividend yields. Altria, a Merck, a Pepsi, Coca-Cola. It owns a lot of the higher yielding type names. And this year specifically, they have really been in trend. A lot of these boring dividend stocks have really been in trend. So here's Abercrombie and Fitch. This is a clothing stock. So unfortunately, their stock is the same price as it was in 2007. Okay, so they're technically the same prices they were back in 2007. So if you look at like an American Eagle, like what are some other ones? I can't think. Like a Gap. Gap is publicly traded. they all trade at like literally 6, 7, 8, 9 times PE. Like, so they're trading at 8 times forward PE. That's kind of in line with what the industry trades at. Let's see what their net income is. They make good net income. Yeah, if we zoom out, like they really are making, like, it is a slight decline. I remember like in 2024, 2025, there was a huge trend around Abercrombie and Fitch clothing. But they're still making good money. Like if you average it out over, well over 100 million of after-tax net income a quarter. And I think I don't think they pay a dividend. March 5th, 2020. Okay, yeah. So they haven't paid a dividend since 2020, but they're probably doing share buybacks. You know what? Let me check that. Let's see if they're doing share buybacks. Net common stock distribution. So yeah, look at that. They're spending like 50 to sometimes 200 mil. Yeah, they've just the past 2 years specifically, they're buying back a lot of their own stock. So let's see how much. The net income fell by 14, but the net income per share only fell by 5. You're kidding me. They bought back literally 8% of the entire company. Just in the past year, they bought back 8% of all the shares. That's why the EPS only fell 5 when the net income fell by 15, because there's 8% less shares that exist. Interesting one there. But again, that stock's being hurt right now, and it's not just like an Abercrombie and Fitch issue. Like look at Nike. Nike is also doing terrible. Lower than it was Nike's lower than it was in 2015. Nike reports a 300 million pre-tax charge related to job cuts. Yikes. I used to own Nike. They were in this portfolio. Sadly, I didn't like their fundamentals, and I did sell out of Nike. I did used to own them in here. Is electricity going to be the new oil for the next industrial revolution? That's a good question. There's like right now, utilities it's the most unique time for utilities ever, because there's never been such a surge in demand for electricity ever in history. Like it's one of the most interesting times to be in like energy utility companies ever. Like a Southern company, this is a regulated utility, and they're at an all-time high today. Actually, my favorite electricity utility, if I wanted to buy one, or the one I own, is actually CEG right here, Constellation Energy. They are a nuclear focused utility. This is the purest nuclear play out there that exists. There is no close second. They own over 30% of all the US's nuclear reactors. They have these fully amortized, fully paid off nuclear plants that were built like 2 decades ago that are fully paid off and just print net income every month, every quarter. So big fan of CEG. They also have a nice dividend share buyback program, and they do M&A. I am up. It's not the best time to buy them currently. I'd put them on the watch list if you found this one interesting. And I've done some videos on them too if you want to check them out. But yeah, this is the best utility that exists in my opinion. They're going to be the growthiest. Okay. Oh yeah, Levi too. Yeah, Levi Jeans. I think it's one of like oldest companies. How are they doing in net income? So look at that. They're actually making a good, just like consistent, like 100 to 150 million in net income a quarter. It's actually pretty interesting. And you get a 2.75% yield, a 37% pay ratio. How's Gap doing? Again, these kind of retail stocks. Like we saw Abercrombie and Fitch, same price it was in 2008. American Eagle is the same price it was in 2008. Like Gap is the same price it was in 1998. These are not the kind of stocks you buy if you want to outperform the tech-heavy S&P 500. These are like cyclical kind of swing trades, because they like especially American Eagle. It has these like up and down. Like this is Agnico Eagle. That is not what I American Eagle. Okay, well. Okay, we can't find. Oh well. Let's see. I could see Cameco become worth looking at. Yeah, so that's the uranium provider, ticker symbol CCO or CCJ. This is Cameco. This is the best uranium stock that exists out there. They have like a 40% market share out of all the uranium stocks. This is the most quality one that exists. And nuclear is what powers nuclear reactors. Cameco signs $1.9 billion uranium supply agreement with India. Wow. But check this out. Actually, another cool, interesting. This is the only one in the US that exists. Ticker symbol SOLS. I was just doing research on this one. This is the only one that exists in the US. They're the only company that actually converts uranium into like the yellow cake uranium into like the usable uranium for nuclear plants. So they mine the uranium, it goes to Solstice, they do something to it to make it used in I'm really not too educated on that subject, but I was reading a article and it was fascinating on that company. They're like the only US facility that can convert uranium into like usable for nuclear plants. Hey, what up, Truth Seeker? He said he left a comment the other day on my YouTube video. He says, "Remember, I had a 260K loss. I'm almost back to my original balance, losing nothing." That is crazy awesome, dude. Congrats, Truth Seeker. That's why you never panic sell. Companies in the long run should just quality companies in the long run will always. Sometimes you have to be more patient, but they always give you good results if you have a good strategy. All right, what's next? Ooh, Monkey D. Luffy. I love this stock. EMR. So this is a competitor to Comfort Systems. This is an HVAC company, or actually, wait. Oh, EMR. Okay, wait, this is wrong company. This is actually an electrical infrastructure company. This is Emerson Electric. I was thinking of EMCOR. Sorry. Emerson Electric, I guess this brokerage telling me there's a little bearish flag forming. Oh, well, that doesn't matter. That's a pretty good forward PE compared to current PE. So they're trading at 33 times PE. But on the right, they're only trading at 27 times forward PE. So that's very fair. And these are the kind of components that are really benefiting from AI right now. Final control for electrical systems, control systems and software, sensors, safety and productivity, test and measurements. So how's the total revenue growing? So when we combine all the businesses, I thought it would be higher growth than this. So it's kind of mid-single digits, 4% growth, 5% growth. But check out the bottom line on this company. They really do make like 5 to 600 million plus of after-tax net income a quarter, 14% net margin, 600 million of free cash flow a quarter. Hey, not too shabby. And you get a 1.5% dividend yield. Yeah, I think, like an electrical infrastructure play, final control, measurement, discrete automation. Oh, they're trying to get my cookies. Well, oh well, we won't look at their website, but I've heard of them before. Yeah, Emerson's cool. Have you covered Bull since earnings? I have not, actually. Let's check out Webull. So this is this app right here, publicly traded. I am a user of Webull. Here's my Webull account right here. And I am a shareholder of Webull too, ticker symbol Bull. And they just reported earnings. And let's go look at them. Are they loaded down here? Dang, so they haven't, wait, Q3. So they haven't loaded down here, but it is right here. So they beat on revenue. They expected 161. They did 165, but they did slightly miss on net income. They expected 16 million net income, and they only did 3 million in net income. So, but the revenue grew very nicely. Yeah, the revenue. Oh, wait, here. Webull now operates in 14 countries with expanded crypto and trading prediction markets. Customer assets grew 84%. Quarterly retention rate is 97%. Oh wow! So their premium subscriptions now they have 102,000 people paying for their premium subscription. I don't pay for this, but yeah, I personally don't. But they have a way where you can like pay them a monthly subscription. They've kind of copied Robinhood Gold, so they just added in prediction markets and crypto and this Webull premium subscription right around the time they IPO'd. So I just really like just the future. I just like the future growth story. Customer asset surge 81%. So yeah, I really like the top line growth, and they're still profitable. They just need to fix their net income a little more. But the revenue grew very nicely year over year. But I did not like how they missed on net income like that. I actually thought they were going to beat on net income because these prediction markets are supposed to print them net income, but they, I guess, didn't this quarter. Maybe there was a one-time adjustment. I don't know. But yeah, here's my Webull position. Again, it's not one I recommend as a big size position. I actually recommend that you keep it as a very small size position. But yeah, we are down 31% all time on this company. How do you keep Webull from showing your account on live? Oh, when I type in my password, I don't even know. But just the software I'm using just hides it for me. So I think Webull just has that built in. So I guess that's great. I didn't do anything or go out of my way to do that. Sagittarius said, help, my stocks are bleeding. Hey, you know what? The best thing to do is just don't panic sell right now. That's what I'm doing. I actually bought a new stock today. I bought ticker symbol MOG. It's called Moog for the first time ever. It's a very fascinating aerospace and defense stock. I really think it's the best video like I've ever made, or one of my best videos I made in a really long time. My most recent YouTube video, I made it last night at 2 a.m. I was up till like 2 a.m. filming this video, or actually like 4 a.m. filming the video. Full deep dive on that stock. If you want to check it out, it's on my YouTube channel called Nathan Robert. Link tree in my bio. All right, so yeah, here's the SPY. Yeah, the S&P 500. Yeah, down 1% on the day. Yeah, here's its top holdings. The average retail investor can't outperform the S&P 500's, 8 to 10% CAGR that they do every year. So I recommend having the S&P 500 as the backbone of your portfolio. Then I'd pick and choose some individual stocks that you know and love. Yeah, like I own a lot of the S&P 500. Every stock in here is in the S&P, like McDonald's, Google, Constellation Energy, United Rentals, Meta. Buy stocks that you actually use. Like if you love Google, like and YouTube, buy Google and Meta, and literally our natural gas utility bill is through Constellation Energy. That's actually how I found out about them. One day I was just like, we had our utility bill. I'm like, Constellation Energy. I wonder if they're publicly traded, and they were. And then I figured out, wow, they own 30% of all the U.S.'s nuclear reactors. And then I own Amazon. Amazon is one of the best buys I've been doing. I just loaded the boat on Amazon down here. So okay. Only stock really green in here is our oil stock, Murphy USA. It's like a gas station play. Oh, actually, Coca-Cola Consolidated's green. No way. Our Coca-Cola bottler. It's like a defense stock too. What software are you using? Yeah, hey, this is actually a brokerage that I'm on right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's I'm not sure what app you're talking about. All three of these apps, they're all brokerages where you buy stocks, and they're all in the link tree in my bio. Webull, Robinhood, and Moomoo. I recommend this one. It's my favorite one. Costs nothing. It's free. It's actually like with Robinhood, you have to pay $5 a month to like get a bunch of features and like get your APY and stuff. Like there's not even a way to pay this company. Like you get a 3.35% APY on your auto cash. So anyway, it's my favorite app to buy stocks on and actually analyze stocks. And if you want to use my affiliate link, if you go and deposit $100, I think we both get like a little free stock. Okay, they're all the apps are linked up there. Let's look at some more here. Isaiah, dude, Isaiah, thanks again for that heart there, dude. I really appreciate you, my friend. He said Inspire Medical Systems. So, this stock is unfortunately the same price that it was in 2019. So let's see if we can figure out what happened here. So yikes, look at that. So the current PE is a 12, but the forward PE is a 36. So unfortunately, like even though the stock is done bad, a 36 PE is expensive. So potentially, even at the super low level, they're expensive. Okay, actually, looks like they had a one-time adjustment. Like they didn't actually make 130 mil, but they did make 46 million. So that's why. So, okay, it's just that this current PE is just artificially low. So it's not maybe the PE. So, they did beat on EBIT though. Look at that. They expected 19 mil. They did 46 mil. So just the basic EBIT numbers look good. Revenue's growing 12% year over year. Oh, that's a good balance sheet. Actually, check that out. They have no debt. It looks like 308 million of cash. Yeah, zero long-term debt, no debt at all. 300 mil of cash. And what's the whole company worth? The whole company's worth 1.78 billion. So, whoa, 25% of what you're paying, 25% of the whole market cap is just literally their cash on hand. And they're supposed to lose money, but they're supposed to kind of consistently make a little, they're not supposed to consistently lose money. So, maybe we can check out their website just to kind of see a proven sleep apnea treatment. Oh, so no snoring or soft snoring, 92% recommend to a family member. So they maybe sell CPAP machines. It's maybe like a sleep apnea play or something like that. Guess they have like an app. So, or maybe you just like a mask or something. I don't know. Kind of niche-y, kind of cool. I like the top line growth. What stock did you say you bought? Hey, that was Moog. It's my most recent YouTube video. It's ticker symbol MOG.A. And by the way, if you missed anything, you can always rewind the stream. But yeah, here it is right here. Ticker symbol MOG.A. There's MOG.B. It's kind of like Google. There's two different shares, but you want to get MOG.A. I'm actually about to buy. I have the cash right now to buy one more share. I have $317 of cash. I was hoping it'd fall a little more. It's down 9% the past week. I just bought them today, plus 8%. Should I actually cover this stock real quick? I mean, literally every space mission craft in history uses their valves and components. They just were awarded so many missile $100 million plus missile contract. It's an aerospace and defense play with also a data center tailwind. They have this industrial business where they sell cooling pumps to data centers. For the full year 2025, it was 25 mil of revenue. It's supposed to literally double just in 2026 to 50 million. And they have like their seamless cooling pipes are like seamless. So a big problem is like leaks for other companies, but not this one. Anyway, if you want to learn the best stuff about this stock, check out my most recent YouTube video. They have hundreds of patents. Oh, and look at the market cap. So the whole company's worth $10 billion, $3.3 billion, or they have a $3.3 billion backlog. So 33% of their whole entire market cap is just their backlog. Mainly from their space and defense. That's up 31% year over year. Commercial aircraft, which is putting their components on like have you heard of the Voyager aircraft? They send hardware and stuff into space literally every week. I have so much good stuff to say about them. They're a little expensive though at a 31 forward PE, but that backlog is pretty cool. Oh, really, B Sudsy? I don't know why. I'm just Apple playing to my computer. I don't know. That's weird. Okay, Louis Vuitton. Yeah, someone said LVMH stocks. So a lot of these luxury stocks are being hurt right now, and it's not necessarily just like a Louis Vuitton problem. Like look at Nike stock. I actually think Louis Vuitton is a much better buy than Nike. If I'm looking for like a luxury brand to get exposure to, I think Louis Vuitton is the better buy because they own so many other brands and they're in higher margin industries. So check this out. They're in fashion and leather goods. That's their bags, expensive bags. But then they're in watches and jewelry, watches, a very high margin, something. And also perfumes, cosmetics, very high margin. They're wine and spirits. They own Hennessy. So they own so many like luxury brands. Here's their number of stores, 6.28 thousand stores. And here's their net income. Now they are headquartered in France, I believe. Yeah, so headquartered in France. So that's why they report in halves. That's why it says 2025 full year and 2025 first half. But for the net income though, for the full year 2025, they did 13 billion in net income, which was 2% lower than 2024. In 2022, 2023, people were spending their stimulus checks on their stuff like crazy. But yeah, we're just having like a healthy, this is way better than a lot of the other luxury stocks, like Gucci stock, Keyring. This stock's in the toilet. Look at Keyring stock. They own what do they own? It's Gucci, YSL. Anyway, Louis Vuitton is the best one to buy, and you get a good dividend with the stock as well. And I like their higher margin industries like wine, watches, perfumes. They have a 2.6% dividend yield, and the forward PE is a 21. They're actually cheaper than Nike, and I think they're going to have more growth than Nike. If we go to Nike right here, they're actually at a 30 forward PE, but Louis Vuitton is actually a bit cheaper, and I like the business more. So actually, I actually do like that one. Oh yeah, Roblox. I did want to get to this one. Unfortunately, there's some bad news. Out of all the gaming stocks that exist, I bought AppLovin. AppLovin is a much better buy than Roblox and Unity, in my opinion. But there's some good news about Roblox. I think you'll find pretty interesting, but I'll show you the good news and the bad news second. So here's the good news. I don't know how they pulled this off, but they now have 144 million daily active users. When this exact same time last year, they had 85 million daily active users. So their daily active users literally went from 85 to 144 million. That's an insane year-over-year increase. But here's the bad news. They are losing more and more net income. I don't know if it's just because kids don't have credit cards to give them money, but look at this. They lose hundreds of millions a quarter in net income. It's 43% worse than the previous year. They lost 220 mil the same time last year, but they lost 320 mil this year. So losing a couple hundred mil a quarter. And that's what scares me because they have a lot of leverage too. How are they going to pay off? Their liabilities and debt going up every quarter. How are they going to pay that off when you lose more and more net income every quarter? So it's a stock-based comp issue because, yeah, they have free cash flow, but this is a non-GAAP metric. You always want to look at the GAAP net income because it includes the non-cash expenses like stock-based comp. They would be paying their employees with cash, but instead they're paying them with stock. So that's why you have to include it in GAAP net income. So it's just like the net income is really scary. But that daily active users growth is impressive. The sales growth is good, but they're just nowhere near any sort of profits. And that's why I think AppLovin is the best kind of gaming stock. Boring company to invest. Like, what is the projection? They will release a new bag? Oh, oh, I don't know. It's just, yeah, you're talking about Louis Vuitton. Yeah. Haven't done too much research on them, but yeah, Louis Vuitton, I like it more than Nike. And if they kind of cater to like the higher, I guess if more people are, I heard that like more and more millionaires are being created every day. I don't know if they benefit from that. Who knows? But anyway, someone said TPET. This is Trio Petroleum. Yeah, I'm sure any kind of oil, petroleum stock is up on the day. I wouldn't really touch this one. If you look at the top right, the market cap, this whole company is literally worth 23 million. So this is like just such a small market cap where it's like not even worth owning. Unless you want to like short-term swing trade it or something. Like they're worth 20 million and they lost 2.7 million this quarter. That's over 10% of the entire market cap they lost. I guess it looks like they're getting their first ever sort of revenue, 100K, no debt, which is good. But that's not, if I was going to buy and hold and forever a petroleum or oil and gas stock, that's just such a small market cap. I just couldn't trust that one. So yeah, someone said Raytheon. This is one of my potentially like favorite aerospace and defense name. They mainly sell like missiles and ammunition. And like, that's kind of like, I don't want to own the war. I want to own the people selling the bullets. You know what I'm talking about? And that's Raytheon right here, who just gets crazy missile contracts. Like, let's check out the most recent contracts. Okay. White House to meet with Raytheon and defense contractors on accelerating weapon production amid $50 billion supplemental budget request. U.S. Defense Department agrees with Raytheon, Lockheed Martin, and Boeing to triple their missile production capacity. Congressional members holding RTX shares raise conflict amid interest amid the Iran military operation. So, hey, if you want to be like the genius Congress members like Nancy Pelosi, go ahead and buy some Raytheon shares. They own it for a reason. Anyway, they have great net income and great brands like Pratt and Whitney, Raytheon, Collins Aerospace. These are all great. And if we go to their bottom line, they're easily making 1.7, 1.8 billion in net income a quarter. And with all these new conflicts and stuff happening, that's why the stock is pricing in the future growth. There's going to be a lot of future growth, and especially it's a nice hedge if the war doesn't de-escalate soon. It's a nice hedge if it escalates. What is this one? RVI. Let's check out RVI right here. So, whoa, this is Robinhood's venture fund. I didn't know they had this out yet. So this is Robinhood's first ever like ETF. Dang, there's no data on this because it literally came out today. Wow, venture capital public with fund IPO. So this is basically like an ETF. I wonder what it's going to own. I don't know if it owns like part of SpaceX or something, but it's down 11% on the day. Thanks for telling me about that. I did not know they were out yet. There's already 68 million assets under management. Cool. I'll definitely put them on my watch list and see when we get some data loaded in about them. So that'd be definitely interesting to see. Oil will increase in price, meaning production costs will increase, inflation will stay high. Yeah, that's one thing being talked about right now with oil going up. What's that going to do to future inflation numbers? Yeah, look at ExxonMobil. I mean, it's at an all-time high right now. All right. Are you interested in SpaceX when they go public? Not really. I already own SpaceX via Google. Fun fact, I don't even think a lot of people know this. Google is one of the best investments ever. They're up 50x on their SpaceX investment. If you didn't know, Google or Alphabet literally owns 7.5% of all of SpaceX. So if they IPO at 1.5 trillion, think about that. Google owns 7.5% of a $1.5 trillion company. It's just so insane. So yeah. And I know Amazon is really competing. Amazon Kuiper Satellite is really competing with SpaceX Starlink thing right now. RVI includes credit card for gold members. Oh, okay. It owns private credit companies. Okay, so yeah, it must be like those SpaceX, OpenAI kind of stocks. VRT, yeah, that is Vertiv right here. This is a like data center cooling, mainly a data center infrastructure stock. Let's go see if there's any news. There's got to be something good. Vertiv launches digital twin platform and one core infrastructure solutions. Partners with Hut 8. Okay, it's like a Bitcoin mining company. Vertiv and to generate capital form strategic collaboration for data center powering and cooling solutions. So I believe Vertiv, yeah, they do a lot of cooling infrastructure. They do like water cooling and stuff like that. And, data centers need that. If you look on the left, they're really expensive at a 72 PE. But on the right, the forward PE is only a 44. So that's much more reasonable, a 44 forward PE. Their products revenue is, let's check this out quarterly. Yeah, products revenue is up 23, after grew 30. So that's great. And then there's service and spares. That's up 21%. So both businesses are growing very nicely. Let's see down here. Revenue's up 22%. And the net income's up 200%. Look at that. If we zoom out, they've never made more net income in their history. The highest amount of net income ever, 445 million. Yeah, that's the after-tax number. The before tax was 606. After tax was 445. So they paid 140 million taxes. The free cash flow was $880 million. Man, no wonder they gapped up so insanely on earnings. Yeah, that cash from operating activities, that's insane. So they're deleveraging. Their liabilities used to be 73% of their assets. Now it's only 67. And they pay a dividend too. So anyway, congrats if you on that one. It's like a data center infrastructure. Google's a great company. Yeah, I totally agree. Google's a phenomenal never sell stock. What about Anduril? Yeah, Matt, I've not heard of Anduril before. Is that are they public or? Okay. But if they have a stock, I'll check it out. Oh, competing with Palantir. Yeah, maybe for defense contracts. Oh, this is a crypto bank out of Brazil. It's actually fascinating to me how great they're doing. So if we go to where the revenue comes from, literally 93% of it comes from Brazil. And that's where they actually use crypto for transactional purposes because their currency isn't so great down there. But the thing that blows me away, and again, this is in US dollars, is the net income. 900 million this quarter. And that's real. This isn't some one-time adjustment. They really do make like almost $1 billion of net income a quarter. And at this insane growth rate, like what's it going to be the same time next year? And they're also applying right now for a US banking charter, and they're about to get it. Okay, dang it. It's already gone from the news tab down here because it was like a week ago. Oh, look at that. NU Holdings with 131 million customers, 45% revenue growth. Morgan Stanley raises price target, projects 100 billion valuation by 2026. Well, it is 2026, and they're worth 71 billion, so that's a good upside. Yeah, man, they're still cheap. If we go to the forward PE, they're only at a 17 forward PE. Part of that low valuation is just because, the revenue all comes from Brazil. It just gets a lower multiple, but you can't make up this USD net income. It's so good, and it's a nice way to get exposure to crypto. I actually might buy them. I hear they're being considered for the S&P 500 today. Oh, is that today? Okay. So a few stocks that might get added is Reddit. I know Reddit is being talked about to get added in the S&P. I wonder if that'll be talked about in the news tab. Hey, look at that. Yeah, the very first tab here, 7 minutes ago. S&P 500 changes are due out soon. These AI stocks could join. Lumentum, Coherent. They talked about Reddit somewhere because Reddit's one of the largest market caps not in the S&P. Okay, and I do own Reddit. We'll look at a few more here. Dang, I've been live for 2 hours and 30 minutes. We'll look at a few more stocks here. Then I gotta go. But this has been fun. If y'all wanted the follow button, we stream every day. I sell nothing, no course book. Feel free to hit the dislike button. I'd really appreciate that. Yeah, someone said Palantir. Yeah, Palantir is actually, they're saying, look at this, the third line here. Palantir benefits from the US-Iran conflict as defense AI demand surges, secures a $1 billion DHS contract and a $10 billion Army contract. Pretty insane. And we go to the government revenue. This is the insane part. It's up 60%, after grew 40, after grew 10. So the growth rate is growing on the government revenue. And also the commercial side, the commercial is growing even faster. This is up 81 after 31. So this is a pure growth stock with nice tailwinds from, the conflict. They're also have no debt, literally a debt-free company. They print net income every quarter, beat expectations every quarter. So that's why Palantir is a phenomenal never sell. So yeah, let me end this with a portfolio update. And thanks again to everyone that's here. So I'll end the stream with a stock portfolio update. Feel free, again, if you wanted to follow on, we stream every day. So here's my Robinhood portfolio. This is known as my dividend-only account. We are down 2.3% on the day, or $670. Year to date, we're down 1.15. So yeah, here are all the stocks that we own in here. Literally every single stock on here is down on the day, which is all right. And if we go to our total percent change, luckily we are still net green on every single stock in here. So it's I can afford a little bit more pain. But yeah, if we go to a Roth IRA, this is where I just did an insane new purchase. I bought Moog for the first time ever. I really recommend go watch my most recent YouTube video. I just did a huge full depth, in-depth analysis on Moog stock. I promise if you don't find it impressive, feel free to hit the dislike button. I promise it will impress you. Moog stock. I also did a full analysis on it at the very beginning of this stream. This stream stays up forever. It's on YouTube, so you can go on the YouTube stream and rewind it. The very first stock we look at is a deep dive into Moog. Or actually, I'll end the stream doing another deep dive on them. But yeah, this is my Roth IRA. Here's my total percent change on every stock in here. Like we're down 38% on Cormedics, 31% on Webull. And then we have, here's our Webull account. I love being fully transparent. All time, our open profit and loss, we're only up 7.7% all time. So not exactly not beating the S&P 500. We're down 0.89% on the day. Here's the biggest losers like AMD, we're down $50, CHRW, Dave, Clear Secures. Anything green on the day? Yeah, so some of our defense names like Sprouts Farmers Market, Southern Company, the utility, Calmaine, the chicken egg commodity, slightly green on the day, which is cool. So heard SoFi could be added into the S&P 500. Oh, that'd be great. So here's my Moomoo portfolio. This is actually known as my buy and never sell account. So if you look in the very top left, it's called my buy and never sell account because once I buy a stock in here, I never sell it. We just diamond hand it. So dang, Comfort Systems is down again 4.4% of the day. But year to date, we're actually doing pretty good even though this market's been struggling. We're still up 26% year to date versus the S&P 500, which is down 1.4% year to date. Mainly, a lot of these gains have come from, actually, it's still Comfort Systems. They're still up like 20, 30% year to date, despite being down off their peak. Coca-Cola Consolidated, almost at an all-time high today. This is our defensive bottler, kind of like a staple. I can't believe how good they've done there. It's not the main Coca-Cola parent company. They just bottle for them and Monster and Dr. Pepper. Amazon's a great never sell. I've been buying this one as well. I bought a lot of it around 204 a share average. SoFi was great today in options. Oh, maybe it's predicting it'll get added. That'd be interesting. Innodata was up 5% earlier today. Yeah, actually, I think that's because of its military defense strength. Innodata, yeah, a lot of stuff's red, but Innodata is green because of their their Golden Dome partnership. Hey, actually, Cormedics is going green. That's good news. But let's see. PSX. Yeah, let me cover PSIX last one here because, I'm actually down bad on that one. So, here's PSIX. So, I forgot to show you all my returns on all the stocks in here. We are down 19% on Power Solutions. It's not one I'd recommend you have as like a meaningful size position, but let me show you why I still think it's worth maybe owning just like a slight bit of. Not financial advice, of course. Nothing in this is. But I like that they're so tiny. The whole company is worth $1.2 billion. So, the whole company's worth $1.2 billion and they trade at only 12 times next year's forward PE. That's so cheap. This should be like a 15 or a 16. Like this could stretch up way higher in my opinion. And they have great growth. Okay, so they just reported earnings. They haven't loaded in down here yet, so there should be a Q4 here. But look at their net income before today. They're always making great 20 to 50 million net income, great year-over-year comps. But look at what they reported this Q4. This is the updated numbers. They expected 169. They did 191 million revenue. Then on net income, they expected 14. They did 16 million net income. They beat on EPS. They beat on EBIT. Yeah, they expected 17, they did 24. So I was actually really happy with their earnings, but despite that, they still fell like 15, 20% from a week ago. So I don't know exactly. I remember they bought a company. So they actually just acquired this company called MTL. Where is it? Yeah. So they announced the acquisition of MTL Manufacturing Equipment to support its data center offering. So I actually really like that they're doing an acquisition. I think that might have been part of the news why they fell. But anyway, a 12 forward PE, $1.2 billion market cap. Like, look, the revenue's up 61% year over year. Last quarter was up 74, 42, and they're printing 20 to 50 million net income a quarter, making net income every quarter. So pretty good. Oh, hey, Sagittarius, I did not look at MELI. I'll do that one for you. Question, if you in a stock, does it make sense to add it with it being over 100% gain? Sometimes I did that recently with like Amphenol stock. Like, check this out. All my shares, my initial cost basis was at $59 a share. But then I'm like, this is just such a great company that I'm buying it all the way up at $128 a share. So I bought it when I was like up 110, 120%. I didn't mind because the valuation was so good. But it all depends. Like, usually it doesn't usually feel great raising your cost basis. But again, you always want to focus on your quantity of shares. Like, that's what I'm focusing on. Like, I just want to build up my quantity of shares. Like, it's a fair valuation. I'm okay paying its valuation. Even though I'm already up 100%, I'm still fine continually adding to the shares, and certainly wouldn't be trimming it. So MELI, this is like a Brazil Amazon, or like an international Amazon almost, or like a Brazil, I'm pretty sure. Let's see. Yeah, so yeah, look at this. Brazil is 52% of the revenue. Mexico is 22%. So basically a South America kind of e-commerce company. Let's see, is there any news down here? Oh, so this was the bad news. Yeah, Amazon launches a 15-minute delivery service in Brazil and partners with Rappi. I don't know what that is, but anyway, what Meli does is they just ship stuff to your house in Brazil the same way Amazon does, and potentially Amazon doing it faster could be bad news. But they're also in some other businesses like financial services and income. How is that growing quarterly? Up 32% year over year. Credit revenues, commerce product sales, fintech product sales. If we go to their bottom line, this is what is great. I mean, they're easily making 400 to 500 million of real after-tax net income a quarter. So like, there's no bankruptcy risk here, and the revenue growth. So it's kind of a margin issue. Like, look, the sales are up 44, revenue's up 44, but the net income is down year over year. So that just means the net margin did fall. Dang, it fell 40% year over year. But truthfully, I'd rather own Amazon if I just had to pick one forever, because that's like just Brazil, and I don't know how I feel about that economy specifically in that, but those international markets could offer more growth than Amazon right now. But I don't, who knows? By the way, do you plan on adding more position in Southern Company? I would if they wouldn't have gone up so much. So actually, this is a regulated utility that has a great yield. So if you look at the very middle there, they have an over 3% dividend yield. So no matter what, you're getting 3% of your money back just in a qualified dividend, and they usually give you 3 to 4% in stock price appreciation every year on top of that for a total return of over 7% a year. That's why I bought them. I don't expect to outperform the S&P because it's a regulated utility. So they can't raise their prices without the government's permission. But what's also cool is if they don't get at least a 3% return on their money, they literally give them free money and guarantees them a return. So that's why they usually are stable and give 7% a year, and still even at all-time highs, a 21 forward PE, over a 3% dividend yield. I'm very happy I bought the dip on Southern Company a couple weeks ago. And there was my buy order. I was talking about that one a bunch. Actually, here's my most recent buy orders in literally order. I sorted it to go and order that. So AppLovin is my most recent purchase. Then I bought AppV, CHRW, then Southern Company, Iron Mountain, Calmain, Progressive Power Solutions. This is all in order. So my oldest stock that I've been bag holding for shoe. Look at the very bottom right. I've owned UiPath since 9/2021. I've just been bag holding that stock. Same with Zoom. I've held that since 2021. They're just too cheap to sell. What stock you buying next week? What's up, Penguin? Yo, I'm probably going to buy a little bit more of Moog stock. I'm also potentially looking to just to build on my quantity of shares. Like someone earlier said, like, you don't mind buying even though you're up. Yeah, I want to build up my quantity of shares in Meta, because if you look at my total equity, oh my goodness, Meta is like my smallest position in here. All my other stocks in here are worth over $4,000. I want to get Meta close to a $4,000 position. And let me share with you why I'm happy to buy Meta at current prices. I can't believe it. On the right, they're at a 21 forward PE. For Meta, that makes $50 per year per Facebook user. The one that is now introducing ads to Threads and WhatsApp, that's going to be huge earnings tailwind. They're buying TPUs now. I love the Meta Ray-Bans. Has anyone seen the Meta AI Ray-Bans glasses? I love what they're doing with that. They literally have half the world on one of their apps a day. They have 3.54 billion daily active users. They're printing 20 plus billion net income a quarter. They had a one-time adjustment last quarter. That's why we're looking at the forward PE. But one thing being questioned on Meta is how much they're spending on AI. Like, they're literally going to be spending like 40 billion a quarter, which is more than they make. So they're going to be spending more than they're making for the next year. But they're like, I don't know how to describe this metric. I guess it's like the ARPU, like their average like revenue per user is like going up, or like their ad efficiency is like going up. which is great news. Friday Power Hour. Yes, sir. Can you check out Fly? What is Fly? Oh, Firefly Aerospace. I remember. Yeah, they IPO'd not that long ago. They're a very small. Actually, no, they're not that small. I'm thinking of a different one. They're worth $3 billion. I think this is like a drone play. What's their revenue though? Do they have revenue? Okay, so they do. They have 30 million in revenue. That's up 37% year over year. Hey, they got their IPO money and fortified their balance sheet. They used to have like way more liabilities than assets. Now they have a lot more assets than liabilities. Again, so they just IPO'd, so there's not too much history. I don't like that they lost 133 mil just this quarter. That might have been the IPO fee. Let's go to their website though. Sure. Firefly became the first commercial company to successfully land on the moon. Yeah, I don't know about that. Um, Here's some of their upcoming launches: NASA, Lockheed Martin. So they're kind of like a rocket and missions. Oh, they're okay. So this is like a lunar competitor where they're sending these like crafts to the moon and stuff. I don't know. I don't know. There's just not much net margin game there. It. I don't love that they lose a lot of net income. I don't know. Hey, good night, Egg Mayo. Hope you have a great day. All right, last one here. I think we can look at American Express. That's a big holding of Buffett, actually. So if we go to Buffett's portfolio right here, surprisingly, I don't think a lot of people know this. His largest holding is Apple, but 15% of his portfolio is American Express. It's a huge holding for him. Wow, Robinhood launches a $695 platinum card to compete with the American Express premium segment. Really? The invite-only card offers 10% cash back on hotels and rental cars, 5% on dining and flights, priority pass lounge access. Bank of America analysts noted this as an incremental negative for American Express, citing potential vulnerability, as 75% of new Amex Platinum and Gold customers are younger, aligning with Robinhood's user base. So maybe some increased competition from Robinhood. That's actually a fascinating read. I might actually screenshot that and read that later. That's actually kind of cool. But yeah, they're very cheap on the right. The forward PE is only a 17.3. That's why that one might just continue to climb higher. 17.3 forward PE. Credit cards, consumer services, international cards. So actually 77% of the revenue comes from the US, and they do have a little bit of international exposure, which is pretty cool. Oh yeah, global merchant and network solutions. They have like a shared oligopoly. Yeah, if we go to their bottom line, they literally just print money. Easily every quarter, they make in $2.5 to $3 billion of after-tax net income a quarter. And what's American Express doing with $3 billion in net income a quarter? Well, they pay a dividend, and that dividend literally only cost $580 million. And why is the cost of the dividend going down? Because the absolute best part about this is the share buybacks. They buy back literally billions of their stock a quarter. Wow. That's the best part. They buy back like 3% of the stock a year, and you get over 1% of your money back in a dividend. AMD fell 5% last 30 minutes. Dude, I'm gonna take a random guess, and I promise I haven't looked at the news. The US is making other countries sign permit exports if they want to buy AMD or Nvidia chips. That's my guess. Here it is. Drafts global AI chip export rules requiring Commerce Department approval for Nvidia and AMD shipments. Maybe that just got finalized and it just actually happened. And shout out to the legend Travis, dude, with the $9.99 super chat. Dude, thank you very much, Travis. I really do appreciate that. Only thing keeping me semi-alive is AppLovin and Intuit. I'm really thinking about buying American Express. Dude, Travis, yeah, AppLovin has been very nice. Yeah, RIP my portfolio as well, man. This one's down 3% on the day. Comfort Systems is down $800. My Robinhood portfolio is down 2.5% right now, almost at an intraday low. Hey, McDonald's is almost green, showing its defense. But yeah, look at that. Oh, look at Nvidia. Nvidia's down 3%. So a lot of these tech-heavy names are probably going to fall. Comfort Systems is down 5%, Powell 4%. It's an interesting day, interesting Friday. I actually just bought today for the first time ever, ticker symbol MOG.A, Moog. It's my most recent purchase. But dude, thanks again, Travis. Let me know, what stock should I analyze before I go? I was actually going to end the stream right here. If you reply really quick, give me a stock and I'll full deep dive analysis for it. We just looked at American Express. American Express is pretty cool because Warren Buffett owns a lot of them. They're at like a cheap valuation, good dividend, good share buybacks, very fair. So Rolando said, hey, bud, what do you think on, oh, wait, Sixer wanted me to look at IoT. Let me get to IoT. Sam Sarah. So, wow, today's a pretty rough day, but they're up 16%. Oh, they reported earnings. So let's go read this real quick. Reported Q4 earnings of 18 cents per share, up from 11, beating the expectation of 13 cents. Okay, I think it hasn't loaded in down here yet. Well, let's check. Oh, it has. Okay, so here was their numbers. Okay, good. This is really good. They expected 422. They did 444. And a great beat on net income. They were expected to lose 5.5 million in net income when they actually made 22 million net income. And they were expected to lose EPS. They made EPS. They're expected just a triple beat quarter across the board. They beat on revenue, net income, EBIT, every metric beat. So no wonder they're up 16%. That was very good. Yeah. Samsara's annualized reoccurring revenue guidance may be conservative. So they give a conservative guidance. That way they can beat like crazy on it the next quarter. So ARR, annual reoccurring revenue. So they're getting some sort of like subscription revenue. That's pretty insane. And then Rolanda said PTRN. Last up, asked about it the other day. They announced earnings yesterday, 100 million buyback. Let's check it out. So yikes, they're down 5% on the day. News, okay, so they just gave out their 10K. So let's see. Are the earnings out down here? So yeah, here were the earnings. They expected 690, they did 720. They beat on revenue and on net income. That's great. They expected 16 mil, they did 28. So yeah, triple beat across the board. And this was last quarter, so this doesn't include Q4 down here. So you're saying they also did a buyback program? That's great. Let's see, what does this article say? Buy rating on pattern driven by exceptional post-IPO growth, scaling software as a service and logistics, and data-led profitability upside. Huh. Interesting read there. Yeah, you're right. Look, announces a 100 million share buyback program. What's the market cap? That's 5% of all the shares. So they're buying back 5% of the entire company, and they just IPO'd. And they can afford that buyback too, because look, but they made literally an after-tax net income $30 million just this quarter. So that's a good chunk of the buyback program. So they can easily afford that. Interesting there. Wait, let's go to their website. They're on my watch list. Let's see. Pattern.com. We grow brands on Amazon, TikTok Shop, Walmart. So it helps your brand grow on all. Oh, and hey, MELI's on there. Hey, pretty cool. So they help you with marketplaces, fulfillment. They do software. TikTok Shop lets you connect, manage, and scale seamlessly. Discover how we help people. So anyway, some sort of like e-commerce beneficiary. #1 third-party Amazon seller globally. Pretty cool. Okay. All right. Pattern. Let's go check out. Ooh, hey. Are you on any oil play at the moment? Yeah, so the one oil stock I have, and I looked at all the oil stocks. This one hasn't kept up, but it is still doing pretty good today. It's Murphy USA. And I was actually doing a deep dive on them yesterday and looking at their investor presentation. They're opening up like 55 new gas stations this year. And the gas stations that they've opened up from 2021 to 2023 have been performing like insanely well, making like 3x the EBITDA of some of their other stores. Like it's crazy. So anyway, this is my only oil and gas play. It's actually a gas station play. So they definitely benefit. These gas stations are definitely profiting. Like what happens is last time oil price went up, whenever the price of oil goes up like crazy, what people do, and they're so not very smart, but they fill up their tank not as much. Like they halfway fill their tank and they go inside the store and buy a candy bar. So people are frequently coming back to the gas station more and buying like candy bars and stuff inside more because the price of oil is high and they're not filling up their gas tank as much. So anyway, that's kind of my oil and gas play. And the best part about this one is the fact that they have such a low dividend. Or let me show you this. They make on average like easily over 100 million in net income a quarter, well over that. So they're making well over 100 million net income a quarter. The dividend only cost 11 million. It's an extremely low dividend payout ratio for an oil and gas stock. So it's one of the lowest yielding oil and gas stocks. And I love that because they're also one of the growthiest oil and gas stocks because they spend all their money. The main way to reward you is share buybacks. They usually do a couple hundred million. Like, let's zoom out here. They're always doing a couple hundred million of buybacks a quarter. And that just so accretive to the EPS. Actually, since we're running up to the end of the stream here, I have to show you how impressive this is. This is why I bought them. So I'll just go to the total common shares outstanding right here. Yeah, so look on the very left. This is their 2025 Q4. There's currently 18.57 million shares. So right now there's 18.5 million shares. If we just go to 2021 or 2020, right before COVID, there was 30 million shares. So it went from 30 million shares right before COVID to literally 18 million. That's almost that's 40% of all the shares. That's like just... it's so insane. And the dividend only cost 11 million. Like, we can compare that to EPS. Like, look, dividend costs 63 cents of EPS a quarter, and they make in EPS a quarter $7.50. And the cash flow per share is over $10 in free cash flow per share. And the EPS is like 7 plus of net income per share. That's also why if we zoom out on Murphy USA from like 2019, here's the 2019 dip. They have smoked every other oil and gas stock, and I finally found them at a pretty decent time. They're like a 17 forward PE. So let's look at Vertiv really quickly. I kept saying I was going to end the stream. This time for real, we'll look at two more. We'll look at Vertiv and then Cisco. Yeah, that's a nice oil and gas cybersecurity tailwind for Cisco. So this is a data center cooling and just data center infrastructure stock. Yeah, the S&P 500 changes are due soon. I think Vertiv might be one of the companies added because they're worth $91 billion. And check this out right here. This is what, like, no wonder the stock has done so well. No wonder they gapped up so much on earnings because their earnings were so good. Check this out. The revenue grew 22%. So the revenue's up 22 and the net income is up by 203%. So the net income is up literally way more than the revenue. So that means net margin expansion. Look at that net margin. They had a 6% net margin. Now it's a 15% net margin. And the free cash flow hit a record too. If we zoom out, they've never made more net income or free cash flow. If we zoom out, record net income. It's never even been close to it before, and record free cash flow this quarter. So they deserve to be at all-time highs. They're expensive, but they deserve to be expensive at like a 43 forward PE. Do you think crude oil prices will stay high for a long time? You know, it really just depends on, we really need the war to de-escalate because there's actually right now like a lot of supply, like to send oil to other places. Like you take these shipping routes, there's like these shipping routes are shut down right now and because of war zone issues, and it costs way more to send this across the sea and stuff. So there's just a lot of volatility in the oil market right now. We just really need the war tensions to de-escalate. Hey, what's up, Cruz? Good to see you, man. Hope I'm not late. Well, hey, I'm actually unfortunately about to end the stream. Dang, we've almost been live for 3 hours. I really appreciate everyone that's here. If you want to hit the follow button, we try and stream every day. If you want, feel free to hit the oh my goodness. Feel free to hit the like button. Okay, last stock, man. I've been talking to myself for 3 hours, basically in a mic, and my head started to hurt a little bit. But I've had so much fun streaming. So here's Cisco, and this stream will stay up forever. It's on the YouTube. I'm streaming on YouTube and TikTok, so I appreciate everyone that's on. So here's Cisco right here. This is a great dividend growth name. If you buy this stock right now, you will get, no matter what the stock does, you're getting 2.10% of your money back just in a qualified dividend every year. So that's what's insane. And they also have this, they acquired Splunk. It's actually a stock I used to own. I used to own Splunk stock, and then they bought them. And that adds a great cybersecurity exposure for Cisco. And so if you look at the full year, look at the full year results. It's the highest amount for their security business. It grew 60% from 2024. Again, from that Splunk acquisition, but I like them. Let's see. So the networking business, how'd that grow year over year? That's great. So I remember they were struggling, having negative growth. They're back to positive double-digit growth. The revenue's up 21% on their main networking business. Services, that slightly declined 1% year over year. All right, let's see the net income. They print net income. This is the best part though. Like my college stuff uses Cisco software every day to like log in with their app and stuff. And it always says like powered by Cisco in big letters. But yeah, they easily 2.5 to 3 billion of real after-tax net income. Like before tax, they made 3.8 billion. After tax was 3.18 billion. So they really do make like 3 billion net income a quarter. Let's see how much the dividend costs. So they're making 3 billion a quarter. The dividend only cost 1.62. So they can easily afford the dividend. And since they have so much leftover money, like this is a textbook stock of one I'd want to own. The dividend costs little, so they're doing massive share buybacks and they're doing M&A. They're investing into their own business, and they can do this. Since they make so much net income, they can do M&A, do buybacks, and do dividends all without having to dilute you or issue shares. So yeah, Cisco's a pretty decent one. I'm majoring in finance. Hey, what's up, my music? I hope you're having a great day. What's up, man? So anyway, I've been live for 2 hours and 51 minutes. I'm going to go ahead and end the stream here, but yo, thank you very much to everyone that was here. We're going to be streaming tomorrow, and shout out to Norbero for becoming a member, and Travis for the super chats, and everyone. I really appreciate all y'all that are here. Make sure if you want, check out my most recent YouTube video. I did a huge deep dive into Moog stock, and if it doesn't impress you, hit the dislike button, because I promise you it will impress. I bought all my shares today, and I have $314 of cash. Gee, I might go buy a share right now. I mean, like $314.70. I mean, that's the price I'll pay. So here, should I put in the limit order? 314.7. I'll just buy one more share. Let's see if it fills. It probably won't fill, but if it does, oh, it did fill. Okay, great. We got 7 shares of Moog now. Anyway, I got to go. Thanks for everyone that's here. I'll be live very soon, or I'll be live tomorrow. Thanks again. Thanks again, Travis, and all the members. And if you haven't already, please hit the like button. It still helps me out if you hit